Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, guys. Welcome back to another live stream. And just in time, 10 minutes to go here before we get into our unemployment claims. Remember to check out DNA Funded. We dropped the link here just a moment ago in the chat. You can get 20% off with code A1T20 off of any of their challenges. So check them out if you are looking to get funded this year. So, lot to do on the radar today. First of all, I just put out a new trade. I just took a trade on the euro. I went long euro dollar at this current area of support. And I just put out that notification for members. So any updates to that trade, by the way, will be available to see on the A1 Trade Tracker, which this is our new feature that we are currently putting together or currently working on here, to make it so that members within the group, specifically gold members, will be able to track the trades that we're in. I'm really excited about this project. It's a summer project for us here at A1. We're going to build out a really cool portal for members, including guides on fundamental analysis, technical analysis, risk management. We're going to go through some Edge Finder course material here. This is basically just a way for members to better understand everything that we talk about here. I know one of the things here that a lot of people want out of some sort of educational portal is they recognize, like, hey, you're not selling anything here that's not available for free on the internet, but the way it's packaged matters. I know firsthand when I'm trying to learn something, I have paid for some sort of portal or a course like this in the past. Even though I know all of the information is available for free online, it's how it's packaged, how it's specifically sequentially lined up for my experience to learn it the fastest possible. So we're trying to build that this summer. That's a project we're working on, one of many here at A1. But I've currently got like I said, I just went long euro dollar. This is a new trade in the trade tracker. If you have the trade tracker, just go to Nick's Trades. You'll be able to see positions. And just a heads up, it's not a real-time tracker, but it's pricing or updating every 15 minutes. So just some context. Outside of my Forex positions, I've got several stock positions. The stock purchases have been rock star. I'm not going to lie. Delta up 12%, Apple up 18% almost, American Express, Tesla up 20%. And just wait for Meta to open up here today. They had great earnings, by the way. So once the stock market opens up, this is going to update, and we're going to be looking pretty good on that. It's been, I'm not going to say a great year because it's not like I'm up like 20% or anything like that, but we're having a really good year given the circumstances, right? So look, this has been a tough year for many people because the unexpected shift in volatility really caught a lot of people off guard. So let me just discuss this for a second. Will this be available with the Edge Finder package or the Discord? No, this is for Discord. So this is the Edge Finder, right? This is a new portal that we're building specifically for Gold VIP members. So this is not part of the Edge Finder. It is for memberships. And shout out to the VIP members who have been patiently waiting for this. We've wanted to build it for a long time. Our plate is so full of software dev that we have had to put this on the back burner to face some pending issues. And it's it's a constant grind. Like, software engineering is a never ending. If you're in that world, you know what it's like. It is a never ending hamster wheel of projects to get through. And that one has been on the to-do list, but we're finally getting around to building it out this summer. It's going to be multi-month kind of process. Nick, does the earnings, does EdgeFinder have earnings data tab? No, but the stock box has some stuff on that. If you have a stock box, if you're more of a stock person, I'd highly recommend exploring stock box on our website. Man, we're really going through all the A1 softwares here this morning. But yes, you could explore stock box. Head over to a1trading.com/stockbox, one word. So yeah, should be some fun updates. If you're a gold member, we had some people who were looking at the trade tracker and they said they had been members since 2020. And they said, this is so exciting. And because when we launched this product, right, we've had a lot of people sending in DMs on the website saying, hey, can I get access to that? And what's been so cool has been like, we've reconnected or seen people come through the system that are like, oh yeah, no, I'm a happy member since 2021. I'm a member since 2020. I'm like, that's so cool. We've had people in the community for some time. Anyways, let's get into some charts. We've got just a few minutes here before we get unemployment claims. Do we have anything else this morning? We have manufacturing PMIs later on. Is that right? Yes, we do. So we've got ISM manufacturing PMIs. Very keen on seeing what this brings us here today. Unemployment claims, I expect, are probably going to just be another kind of non-event, to be completely honest. We've got a couple minutes to go. But if we get any big surprises, of course, it could move markets. But back to this thought that I just had. So the VIX has been crazy, right? VIX has been very low, and then all of a sudden we rocketed higher. And this right here, I'm going to make the guess that it messed up a lot of people's years, right? Messed up a lot of people's mojo, if you will. Because if you are just getting used to this environment, Lord knows that's a different environment. And if you don't know, like I said, that's why the Lord knows. He knows everything. But the average trader that's getting into this stuff does not know that this jump in volatility completely waxes a lot of people's systems, especially if you're risking too much. This will wipe you out. This did wipe a lot of people out. And what happens is this happens over and over in markets. Over time, the VIX goes up, the VIX goes down, the VIX goes up. And what people do is they fail to recognize that markets change, right? The VIX goes up, the VIX goes down. Markets get crazy, markets get calm. And if you don't know how to weather that storm, a great sailor, right, doesn't only know how to sail in calm waters. That is not my analogy. It's a commonly referred to one. You might have already heard that before, but smooth seas don't make great sailors. There's something of that nature. Someone give me the true, what's the right way of saying that expression? The point is, right, people get used to like calm waters and they think they're a trading genius, but then a rocky storm comes along and only the great ones survive. That is how trading goes, right? Again, people get stuck in this. They've only ever traded in this environment. This is their entire sandbox that they're used to playing in. And then a beach comes along and there's a lot more sand, right? My point is, you as a trader having the humility to say, I need to be prepared for the change that's coming, because the only thing that's certain in life is change, right? Market environments are going to change. We could go back to a calm waters type of environment. How are you going to play this? And what happens? Ask yourself this. Don't do it for me. Ask for yourself. What if we go back to chaos, fire, and burning buildings, and insanity, and trade war, and Ukraine and Russia? What happens if that? What if China invades Taiwan? I almost said Ukraine. China's not invading Ukraine. I don't know, but it's crazy things have happened. So maybe, but Taiwan has been in the scopes of China for a long time. When that happens, or if that happens, I should say if that happens, boom, VIX is going crazy. Markets are dropping. Things are terrifying, right? We don't know when that's going to happen, but what are you going to do when that environment comes along? Are you going to let it destroy you? Let me just say this, if you have been trading in this environment recently and this took you by surprise and it really messed you up, you're not alone, but learn from it. NASDAQ's breaking out here. It looks amazing. I am kicking myself because I almost bought in and missed the low just narrowly. I mentioned earlier on the trade tracker that I've got my positions lined up. I am very long stocks right now, which is great, but I really wanted a NAS 100 trade long, and I'm still looking for it. So here's my my approach to this move. I am looking for this chart to come back down to this level. If it does, I'm not saying it has to, but if it does, I like that for a possible long side opportunity. I think we've broken out. I think there's a very strong chance, not a certainty, but a strong chance that we've seen the low of this corrective move. And just a heads up, this is not a bear market. What do you mean, Nick? Yes, it is. Look at the chart. Nope, it is not a technical bear market. A technical bear market, by standard definition, is when the market from peak to trough closes 20% or greater to the downside. From the highs, we got down. Oh, we're looking at NASDAQ, sorry, S&P. We got down to 21% from the highs. Did we go into a bear market? Well, maybe for like 30 seconds, but we didn't close there. So by technical definition, where we closed, the lowest close that we've gotten is 19%. That puts us in a technical correction. A correction is 10%. A bear market or quote unquote crash is 20% closed down or more. Did we get that? No. So, Nick, you're telling me, that's right, I am telling you this. I'm telling you that what happened here looks to me like a bull market pullback, just like a lot of the ones we've seen before. But Nick, no, the market's going to crash. Trump's going to ruin everything. Oh, I don't know if he is or is he not. I'm not a fortune teller. I can't tell you for certain. But a lot of people were pretty convinced that this market was going to crater down 50%. I saw somebody saying, I watched this guy's video and he was making the prediction. Sorry, we got breaking news. Let me go. Where are we at? 241K. Okay, unemployment claims actually coming in a little bit soft here this morning. Let's take a look. 5-minute chart dropping a little bit. That is actually a bit of a negative surprise here. Dollar index lower as we would expect off that. My euro trade might look a little bit better now. There we go. I'm long euro as of like, what, 10 minutes ago, 20 minutes ago. Went long in the group euro dollar around 1.1316. Yeah, so we've got unemployment claims coming in here, 241,000. That is weaker than expected. And gold, I just got stopped out of gold, by the way. And let me not breeze over that. You know, I always want to make sure that on my channel, when I'm sharing a trade idea that goes wrong, I said this yesterday, and I just want to reiterate it. When I take a stop loss, it's not something that hurts or is a big deal because my size is not massive. Do I like taking stop losses? Of course not. Nobody likes stop losses, but there's an important distinction to make. I stopped out of my gold trade here because the trade just did not do what I thought it would do at this level. And that's okay. Doesn't mean I'm abandoning gold and I'm never going to trade again, or I'm super upset about it, or my account got crushed by this. Not at all. We took a small loss on gold here. And now we'll watch to see how the data falls. And if there's an opportunity to get back into gold, I'll definitely be looking for it. So I stopped out of gold here this morning. Broke this level here around 32.66. That was kind of my line in the sand. We were showing some signs of trying to hold this area, but breaking to the downside. But we're sitting at a support level, so we'll see. But I don't like the fundamentals as much for gold at this moment. I will show you exactly why. So if we go to the top setups page, you guys know I'm kind of a perma bull when it comes to gold. Like I always want to be looking for gold longs when things look appropriate. So don't take me as a betrayal to the bull case. I just don't have the same conviction that I did for the first part of this year. January, February, March, April, I was super bullish on gold. Not because, I felt bullish on gold, but because my system told me to be bullish on gold, right? We can look at this really quick. Let me just do score table, right? So gold lost its bullish reading on April 25th. So what I'm looking at is the Edge Finder's historical score. For new viewers, okay? For new viewers learning about the Edge Finder, greater than 5 is considered bullish, right? I'm sorry, 5 or greater is bullish, right? -5 or less than that. I'm sorry, I'm just getting my things mixed up. -5 or less than is bearish, right? So those are our readings on the Edge Finder score. Where's that score coming from? It's coming from sentiment data. It's coming from economic data. It's coming from technical data. Our system, I'm not going to get all the way into the weeds of how it's scored, but just understand the Edge Finder lost its bullish score for the first time in quite some time, April 25th. April 25th was the last, the 24th was the last bullish day. Since then, it has been back into neutral territory. A slight bullish tilt, but still a neutral zone. And I'm sad to see it go because we have been bullish on gold since February 6th, right? Did we have anything before that? Okay, actually, I take it back. I'm sorry. I said January, February. Only from February 6th until a couple days ago was I bullish on gold. That's my stretch. That was my stretch where my system told me bullishness is still favorable. Bulent, thank you for the comment. And of course, appreciate your membership as always. Nick, hasn't it been like this for years? When a trade is profitable, everyone applauds. When a trade is closed with a loss, they say, why did you enter? It was a bad trade anyways. Yes. And Bulent, I've done this for, oh my goodness. I mean, I've done this since 2018. It's been exactly that way. Our editor here, Chandler, says the same thing. He's getting his oil change right now. Chandler's got the dedication. He's getting his oil changed and he's got his laptop while he waits in the waiting room. He's running the stream, beast mode. But he said, yeah, hit the nail on the head. We've seen comments for years, man. It's amazing. And does it bother me? Not nearly as much as it once did, but always, right? Always, 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 always. YouTube commenters told you so when it doesn't work out and told you so when it works out, right? Everybody is a hindsight warrior when it comes to, there's keyboard warriors, and then one worse than keyboard warriors is hindsight warriors. But yeah, but I'm not even worried about the gold trade, right? I had a great gold trade over here. I did very well. I took 1/2 of my size and re-entered gold here, and it didn't work out. And that's okay, right? Trades aren't going to work out all the time. No matter what system you have, somebody can always told you so about what you should have done after the fact when it didn't work out. But every system has rights and wrongs. Every system wins sometimes, and it, it loses other times. Nothing's perfect. So, I actually liked this trade setup when I took it, but I took it with smaller size because I didn't love the technicals as much as the fundamentals at the time. But since then, conditions have changed, and we're out of the trade, and that's okay. So, gold we stopped out of this morning. Next idea for gold for me is nothing. It's a neutral reading on the Edge Finder at this time. When we go back to our top setups page, you can see gold is no longer on the list, and I have plenty of other things to focus on. NASDAQ, Kiwi dollar. I took a Euro dollar trade. Like I've got several other things that I'm going to be watching in the meantime. So, so that's the thing. So let's see, what else do we have? So we have ISM's manufacturing PMIs later today. It's going to be in an hour and 20 minutes. And let me see, are we, what's our schedule looking like this morning? By the way, you can always check the live stream schedule. Head over to a1trading.com, click live stream, A1 live stream here. And let's see what we've got. So we've got Marco and Miko coming in just about 5 or so minutes. So that should be a good time. So I mentioned this a second ago, but I did go long euro dollar this morning. So we'll see if this level of support holds. So we'll see. Nick, I did the same thing to you about 3 years ago when your trade hit a stop loss. I wrote a comment on YouTube saying there was an RSI divergence. Nick, how could you miss this detail? Brilliant. That's incredibly honest of yourself. I'm pretty sure when I first got started trading, I did the same thing. What's amazing and what's kind of humbling is you realize there's like really smart people most of the time on both sides of an idea. There's somebody out there who's really smart, who's shorting the euro, and they have good reason to do so. There's really smart people who are longing the euro, right? The thing is, it's all probabilities, no certainties, right? So you might say, well, RSI told you to get long. And then someone else says, well, the moving averages told me to get short. And then somebody else says, well, the 1 hour chart told me to get long. And then somebody else says, the Fibonacci retracement told me to get short, right? So the point is, right? Or there's fundamentalists who say this, or there's sentiment analysts that say this, or there's, financial focusing people, like people who look at company earnings and things like that. There's so many ways to determine if something is a buy or a sell, that inevitably you're going to get smart people on both sides of the trade most of the time. But sometimes people are right, sometimes people are wrong. The people who lose money are people who are greedy and over leveraged, and people who make money have a good system, an edge over the long term. And it doesn't matter if they're right or wrong in this next trade. It matters how they do over the next 1,000 trades. That is the ultimate truth, right? If you're ever like, how could you possibly be long or short on something? There's always a bear case or a bull case for each market. There's always a bull and bear case for everything, right? There's a bear case for the S&P 500. Even though I love the long side, I'm very interested. I have a system that's saying bullish, 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 right? COT data looks good. Retail positioning looks good, right? Crowd's still pretty nervous out there. Seasonality looks good for the NASDAQ. Trend to the upside looks good. GDP was a mix or a miss. Manufacturing PMI, we get that data later today. Very curious to see if that flips bullish. Services PMI, total miss. Retail sales was strong. Inflation's great, right? Inflation's doing really well. Let's not overlook that, right? Tariffs have taken precedent, but inflation's doing pretty good. Employment data, mixed. Last time around, we get fresh data on Friday. So I have a system. I have a reasoning for being bullish on the NASDAQ. It would be foolish of me to say that anybody who disagrees with me is an idiot. That makes me the idiot, right? If I think that way. If you are somebody who says, how could you're so like I see these comments all the time, and it drives me crazy. Even in our own Discord, sometimes I'm going to call these people out. I'm not going to name names because that's disrespectful, but there are people who are hotshots who are like, you're short, your stop loss is my entry or something like that. And I'm like, that is absolute, arrogance that will not take you very far in trading. So it's really important that you understand, no matter how strongly you feel, like I feel pretty strongly that the NASDAQ is going to continue higher, but I'd be an idiot to tell you that people who think otherwise are fools. This stuff is not predictable with certainty, right? I may have a lean, but understand that when I say I think the NASDAQ is going to push higher and I'm looking for a trade, I'm thinking like 60-40. That's my probability that I think the NASDAQ, it's just anecdotally, right? 60-40% chance. 40% of the time, I'm wrong and going to look like an idiot. Do you see what I'm saying? Again, if you are somebody who says, if you in your head think, and that's after me doing this for almost a decade, right? And I'm certainly not, I don't know everything about the markets. There's so much to learn. So if I'm saying I have a 60% chance, you guys know who I'm talking about. You guys, if you're in Discords, if you're in Telegram channels, if you're watching socials, you know who I'm talking about, right? You know that there's the guys or the girls that are like, oh no, I'm more like a 90% of the time I'm able to call the markets. And I'm like, well, you're an idiot, because no, you don't. The markets are just, there's too many variables, right? If you can get a 60% correct rate, you're incredible at this stuff, because it's not easy, right? This is what social media makes you believe is reality. Like, oh yeah, no, a 90% chance of calling what the market's going to do. Idiots. You're going to lose money. I'm telling you. Now, can you have a 90% win rate? Sure. But don't forget the risk to reward. You can't say, oh, you might, and I'm not saying 90% win rate. That's not what I'm talking about. I'm not talking about a 90% win rate. Let me clarify. I'm talking about on a one-to-one basis. No one does this. No one does that. Okay. Get that out of your head, because it's going to make you blow accounts. It's going to make you believe that that's how predictable the markets are. And they're simply not that. This is a game of small edges compounded over time with small position sizing to stay in the game for the lose rates that are inevitably going to, or the losing streaks that are inevitably going to happen. Good point, Alan. All it takes is one statement and price will whipsaw in the opposite direction. To believe that you can fully predict what the market's going to do is going to help you beautifully. It's going to help you so much to blow your account. I'm not trying to, you know, be harsh or anything. It's just the truth, man. Like, I see that comment. You guys, has anybody seen that type of person? Type 1 or yes in the chat if you are aware of the, and they drive me crazy, man. Those people, it shouldn't drive me crazy, because the truth is they're just either very beginners or they're just absolutely dumb. Like, I'm sorry, there's no in between. Either you're brand new to this stuff and you think the markets are really predictable and that like the MACD is going to tell you what the market's going to do. Either you're that level of newness or you're actually just an idiot. It's one or the other. So just ignore that sentiment, ignore that mentality, embrace the market with some level of humility and say, I don't know for certain, but I have an educated guess that tells me I think it's going down or I think it's going up. And I'm going to enter here and I'm going to manage my risk here. And that's how real traders think. They don't think in absolutes. The old expression, Chandler and James, that producers of the show love, the Star Wars, only a Sith speaks in absolutes or whatever. It's really true in trading. Sith, aka losing traders, they speak in absolutes. Market's absolutely going to go from here. It has to go up, right? Doesn't ever have to do anything, and markets can shock everybody. They're very good at doing it. All right. We got another segment starting here in just a second. Before we roll the break here to get Miko and Marco in here, let me just remind everybody, the 45% off discount event for the Edge Finder is coming to a close soon. If you have not already picked up a copy of our tools, it's the biggest discount that we do all year long. You get access to all of our top setup scanners, our indicators for economic data, the commitment of traders report scanning tools that we've built here, and of course, our market sentiment tools like the put to call ratio, investor sentiment survey, which by the way, haven't looked at this, look, still super scared, still super bearish. Everybody's still creeped out by this market. 59.3% of respondents saying they are bearish on the market going forward. So keep that in mind. Sentiment is a really powerful tool, and we've built a collection of those things to help traders to better spot that stuff. Don't miss the 45% off sale while it lasts. You can get all the information by clicking a link being dropped in the chat right now to where you can send a direct message to our support team about the 45% off discount. Don't miss it. It ends very soon. Stay tuned. We'll be right back with Miko Marco. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, guys, we're back with Miko and Marco. How you guys doing?
Hello.
Good to have you all back. And, you know, we do this every week. And one of the first parts of the segment that I really like doing is asking you guys for your chart of the day. I've already been going for a little bit. You might have heard me talking a little bit about the NASDAQ. I do feel very strongly that there's a good chance, good educated guess, that the NASDAQ has broken out and that I think that we may actually be seeing a push higher. So my chart of the day, I've already been talking about, is the NASDAQ. But we'll go straight to you guys and ask you the same question. Marco, chart of the day. What are you watching today?
Yeah, I have so much, but let's do something different than you. I'm gonna choose the pound and US dollar.
Okay.
For me, it looks to be reversing from this very short-term descending channel, printing some bullish momentum right now. And also fundamentally, this is a very strong currency pair. On the daily chart, it does look okay. So I think for a bullish play on the 1 hour chart, this looks very, very good with this little bit of momentum that you're seeing. And the second one for me would be the euro and US dollar. Pretty similar scenario. So the daily chart does look pretty good. The fundamentals are bullish, which is good. And then on the 1 hour chart, I'm getting this sort of a, let's say, grab of liquidity. I'm getting a very flat range and then a little bit of a descending channel and then a nice reversal to the upside. So for me, I would pick the pound and the euro for buy setups on the 1 hour chart. But again, today you have Bitcoin, you have the NASDAQ, you have the S&P. You pretty much have a lot of things that are moving. EJ is great. It's looking very healthy right here for a buy setup. So yeah.
Yeah, no, that's a fair list of stuff. I mean, like you said, Bitcoin's looking really strong. You've got a little bit of a divergence here. Actually, I'll just show you a really cool chart. I was just looking at myself. The Bitcoin to gold ratio chart, looking like it's breaking out. This is a really interesting kind of quick sentiment indicator. We've added it under our market sentiment tool. So for a while, gold has been significantly outperforming Bitcoin, but we recently just broke out, it looks like, and now Bitcoin is kind of showing some relative outperformance to gold. What that might suggest is that we went from a risk-off type environment where people are more fearful and not willing to take any risk to now possibly starting a bit of a risk-on rally again, maybe some upside for stocks and for some of the more aggressive currencies like Kiwi, the Australian dollar, etc. So something to think about there. Miko, chart of the day for you. What are you watching?
Yeah, so I've just hopped into a position Aussie CHF, long on that one. I like this one a lot because it is coming from all-time lows. I do think there's a lot of upside for this one. We've had a really big flush to the downside. I'm anticipating price to recover. Looking at how price normally does maneuver when we do create all-time lows, we do tend to pull back pretty strongly afterwards. So I'm looking to see if I can take advantage of that opportunity and see if price can retrace a lot further. I've entered a trade on the 4 hour chart on this candle, which was actually yesterday, but it still hasn't really gone anywhere since then. But I'm anticipating more upside. I like the opportunity. I feel like the market's quite stretched, and at the all-time lows, my thinking is that there's probably less sellers at these prices, and we could see price push up from that basis. So Aussie CHF and some of the other CHF pairs do have the opportunity to go higher.
Kind of interesting, like pretty much another more oriented towards risk on currency pair, right? The Aussie Swiss, if it's going up, it's going to typically prefer to see stability in terms of global activity. I mean, Australia, right? Big producer and exporter of commodities. And then you have the Swiss franc, which is kind of the defensive currency. So by shorting the defensive and buying the aggressive, it is kind of there's some correlation between global equity markets and things like the Australian dollar, which typically do better in calm waters, if you will. So really interesting to see that you're starting to see some of the same markups, same directional changes. We've had a bit of a shift, right? We went from this everyday selling dramatic moves lower on everything. And then now, again, today, take a look at the Japanese index or the Japanese currency index down 1.1%. I guess that's another question for you guys. And Nico, I know you've talked a lot about the yen. What are your thoughts here on this? So you're seeing the Japanese yen pulling back. Do you think there's some opportunities to step in and buy the Japanese yen at a point, or would you be not interested in that?
At the moment, I'm still pretty bearish on the yen, but I feel like we might be seeing a bigger pullback than I expected, because I've been looking at the yen basket, and it looks like price is rejecting resistance pretty well here. And at the moment, we're selling off pretty harshly. But my main thinking is that we are still in this uptrend, so I still have this bullish bias for the yen. Yen basket. So if this is going to push, we're expecting yen strength, and then opportunities to sell the yen pairs. If this continues, perhaps we take up this low, then I'll lose that bias, and then I'll step away from that expectation for yen strength. But yeah, price overall is quite correct. It's not like we've been trending very healthy to the upside. It's very corrected, which is a sign that maybe we could be looking to turn around. But again, market structure is kind of my focus in terms of direction, and so far that's still an uptrend. So I'm still kind of anticipating yen strength until proven otherwise, until we break some lows.
I like that yen basket indicator or a chart. What is that actually? So it's with TRADU, trade U.
Yeah,
I imagine that's just some brokerage or something, but that's cool. I have not seen that one before. I've seen people do like equal weighted dollar index. Have you ever seen those ones? I think that one's really cool too.
No, looked at that.
Yeah, basically it does, like, when you pull up the DXY, right? The pros and cons of DXY, it's kind of like the S&P 500 versus the S&P 500 equal weighted. But when we look at the dollar index, we're really looking pretty aggressively at like the euro relative to the dollar, right? As that carries a lot of weighting in the dollar index. But there are ways that you can actually do an equal weighted, where you equalize, Aussie's impact and CAD's impact and Euro's impact, which would give you a little bit more of just how's the dollar doing relative to everybody else, rather than how's the dollar doing everyone else based on weighting, right? Where it really, if the euro has a really bad day, the DXY is going to go up quite a bit. Whereas if the euro has a really bad day and you're looking at the equal weighted, the dollar index will go up a little bit, but it won't, dominate. So, all sorts of different ways to look at markets. I actually do think, personally, I generally prefer to look at the weighted stuff, like the S&P 500, because again, Meta, huge company. I actually want to see that weighting within the same thing with the dollar index. I want to see the euro's impact and the yen, the bigger currencies relative to the dollar. But it can be also useful to get both perspectives. So that yen basket that you did is cool. There's all sorts of different charts that I would encourage, listeners to explore your options. Look up equal weighted dollar index, equal weighted S&P 500, which you can do with RSP. It's an equal weighted ETF. So it looks at every company within the S&P 500 and just says give equal allocation and how would the performance be, which is, you're not giving Apple, huge chunks of the weighting. You're giving it just one is equal as Delta Airlines, right? So every single one is getting equal weight. So just cool things that you can explore and learn. And, us chart junkies always looking for new things to stare at. So good stuff. Marco, question for you too. Last time we talked about gold, I stopped out of my gold. I had a trade that went really well. We talked about that. I ended up taking profits, and then I decided to re-enter with 1/2 of the size at a level of support that I thought would hold. And then I stopped out here this morning. Are you looking at gold? Are you trading gold at all?
Yeah, I'm waiting for a signal on the edge finder. So if we quickly flip to gold, waiting for that signal. So until that happens, I won't be able to do much. But I do like that we are pulling back, retracing a little bit. Something that I've started to look at is possibly the 20 EMA, just to get a gauge of if we're overextended. Now with this pullback, I kind of like this actually. So if we can go maybe a bit lower to this support level and then get a bullish reading on the edge finder and a nice entry on the 1 hour chart, I would be pretty happy to look for buy setups. And that is going to be my game plan for gold. Yeah. Current market environment is switching from risk off to a little bit risk on. So that would not be bullish for gold. But if it cannot be sustained, if we get some, let's say, pausing on the S&P, if we get a bigger correction, or if we get some tariff news that is not so great, well, then gold can absolutely go up a lot. And then silver, if we do break some of these highs, I think it could be a really good bullish play because it has a lot of room to catch up to gold. So if we can break these highs, get a extremely risk-off environment, so get a major tariff news that is not going to be great, I would think that silver would maybe be an even better play than gold. So we will see what will happen. I definitely have my eyes on both metals, and currently maybe silver is actually bullish on the edge finder. I would have to check that again. So yeah, silver actually really interesting if it does go up more.
Yep, and silver is, I just checked myself, silver is getting a bullish rating alongside Bitcoin, which I know you mentioned a second ago, Marco. Tell me more about your Bitcoin. Would you trade that one, or is that one just an interesting one to watch for you?
Yeah, I do have some crypto, and I would definitely consider trading it as well. It's looking very healthy right now. So, and again, comparing to the NASDAQ, it has held up much better. So if we can possibly pull back to this level, I think this is the level that a lot of traders are watching. Or if we can continue up a bit more and then pull back a bit, maybe retest this whole cluster, get a nice buy entry on the 1 hour chart and keep the bullish rating on the edge finder, of course, I would be pretty happy to get in right there on a buy setup and then possibly aim for the all-time highs, or possibly even trail the stop loss, because I mean Bitcoin is really holding up well in this massive risk-off environment, and we are now almost back at the 100K mark. We are very close, so there's a really high chance we can get up to those all-time highs.
Yeah, no, it is certainly an interesting time to watch Bitcoin do relatively well. I want to show you a chart I'm just building here for us to look at. So again, I've said this many times, but if you had told me that, we were going to have this kind of market sell-off that we did, I would have responded with, okay, so Bitcoin's going to probably be down terribly. But what I've just done is I've built a chart here. I crossed Bitcoin with the S&P 500, which has had, like I said, a pretty rough year so far. And look at what we see here. We actually see the Bitcoin versus S&P 500 year-to-date performance. Bitcoin is actually outperforming in this environment, which is incredibly impressive. On a technical basis, we would call this relative strength. We talked about it a lot on the show, but this relative strength for Bitcoin is incredibly, incredibly impressive to me. And, I actually would be very curious to even watch this chart specifically, Bitcoin versus the S&P 500, for a possible breakout. I mean, this could be a really strong signal that, we're seeing higher lows. I mean, this is despite, all of the carnage this year, Bitcoin has been very strong. It's been seemingly a place for investors to hide out. So very curious to see how that relative strength, if it can continue to hold up or even continue to outperform over the many years the years that Bitcoin has been around. You can actually see this is Bitcoin versus S&P. Bitcoin has consistently over time, although having terrible periods of underperformance, it has outperformed pretty well. So it's an interesting thing to continue watching. Miko, question to you on Bitcoin, just because Marco shared his thoughts. Trading it, maybe you don't trade it, but from a perspective of just that relative strength concept, what are your thoughts on it?
Yeah, Bitcoin's looking pretty good, especially since we've had the breakout a week ago now, and price hasn't really collapsed down. I think I like the way that price is still holding ground. Of course, the day looks like we're seeing momentum today, but we'll see how that does close. But in all honesty, I do think there's a pretty good chance we push back to highs now. Even if we do have a bit of a dip, I would anticipate that to be retracement for us to go higher. And generally speaking, the market is still in that bullish climate. This was a very, very corrective pullback. The way we've kind of broken out momentum is a really, really healthy sign for continuation of this bullish trend. So my thinking is more upside for Bitcoin, and kind of similar to Marco. If we can get a retest of that area, I think that looks good. Or if price was just to shoot again, a retest of that consolidation on a lower chart, I think that'll look good for an opportunity to enter. So yeah, I'm very bullish on Bitcoin.
Yeah, no, it's like I said, one of the most surprising things I would say year to date. Bitcoin's chart looks phenomenal on a weekly. It looks great on a daily. You're breaking out of this key level of resistance, and it's, like I said, a very impressive asset, considering all the things that have gone on. I mean, I really have to kind of eat my own words, thinking that, you know, if you're going to have a market sell off 20%, Bitcoin should get crushed. It's really holding up quite well. So we'll have to continue to watch that, but I am bullish on Bitcoin as well.
I have a question for you.
Yeah, go for it.
So you're watching the gold to Bitcoin ratio, but if Bitcoin continues to be this sort of risk of safe haven, which it kind of was in this market sell-off, is that chart something you would continue watching, or would it kind of be negated because both gold and Bitcoin would held up well in a massive sell-off?
So I think what's interesting is, if we do just really quick a correlation, let's do correlation to SPX500 really quick. We can look at this a different way for a second and just think about, like, okay, S&P 500 versus Bitcoin. What we can see here is that Bitcoin is still behaving as a risk asset. So I wouldn't give it the full credit of being like a safe haven per se, because we can see there's still some positive correlation. This line being this high, close to 1, signals that there is correlation still to the S&P 500. There was a bit of uncorrelation, or you know, the opposite, a very low correlation during some of the sell-off that we saw at one point. But for the most part, the theme here has been relative strength, but not necessarily completely hedged. Like, there's still, it's kind of like, my thought would be, okay, if this is the S&P 500, I thought Bitcoin would do this, but what we actually got was this. Let me use a different color. We actually got this, which, so we still saw Bitcoin decline, but it declined by significantly less than what, you know, I would have expected. So I still think that it's a risk asset. Like, it's still, if we enter into a recession, my idea on Bitcoin would still be that it's going to go down. Like, if we see a true market ugly scenario, Bitcoin probably still goes down. I've just been shocked by how it's not gone down way more than it did, given, you know, the stock markets kind of freak out and sell off. So to me, it's more, it's still valid to say, you know, Bitcoin is a, it's I wouldn't call it a safe haven personally, but it's certainly holding up. It's got its own 2 legs to stand on. So if we go back to that market sentiment, Bitcoin to gold ratio, like, I still think gold is the favored in terms of like a true scare event, but Bitcoin has just held up really well compared to the S&P 500. Maybe another chart to add to this would be the Bitcoin versus S&P chart, which would also be really interesting, just to show that relative strength in kind of a high risk asset versus a risk asset.
Yeah, definitely.
Just something to think about.
And probably if the problems weren't isolated, as you mentioned, to the United States, probably Bitcoin would go down as well.
Yeah, no, that's a great point too. Like, if it was more of like a global recession in, you know, taking place currently, Bitcoin's probably going down very aggressively. But yeah, it was a bit of a sell US, buy everything else, and Bitcoin was a big winner in that kind of exchange. So really interesting. But Bitcoin up 2.4%. Really, really impressive today. Miko, we talked about silver a second ago. I wanted to get your thoughts on that one too. Are you watching silver? Any trades on this one, or watching it at all?
Yeah, I'm definitely watching silver at the moment. I like it because you've had a bit of a sell-off recently. And I'm looking at that as possibly the pullback that I need to actually look for some longs. I've been eyeing up this level here. Probably see it better weekly maybe. Yeah, just about. There's a big level resistance here. This was actually a level I was looking to buy from a few weeks back when we had the first kind of drop, but price just kept going and broke through the level. But we have since recovered back above that level, and I really like the way the market's moved. It's very aggressive since we had a really aggressive sell, so it's nice to see the market recover straight away. And now it looks like we're back above the same level I was looking to buy from last time. So if we can hold on to this, I will be looking for some entries, and hopefully I can take it back to the high. The only thing I don't like about silver is that it's still very flat. So I'm not going to be so confident in terms of swinging back all the way to the highs there. I think price will eventually get there, but it could be like a messy move. It might be a bit of consolidation back and forth. It might eventually get there. So it might be a scenario where I might have to look for maybe a few entries, but this is the area I'm interested in. I'm looking for entries on the 4-hour chart. So what would be my trigger would be some momentum. So if I can see a strong close, that would be what I'll be looking for. Stops below that wick there, and at least targets back at 33.5 and maybe 34.5 as well. But it might be a bit of a messy move. But yeah, I'm definitely interested in silver longs.
It's been a really impressive bounce back on silver, just that V-shaped move that's on your screen, right? The big tanking sell-off and then bounce back aggressively. So some really good strength there. We've done this. This is probably our OG discussion about, relative strength is the gold silver one, because it's a very obvious one, but we could do XAU USD. And this is for anybody at home that would like to recreate this on their own screen. Go XAU USD /XAG USD and just hit enter. This will give you the, and I like to look at this on a long-term basis. So the weekly chart, this is the gold to silver ratio. Way to read this is how many pieces of silver, ounces of silver, do you need to get 1 ounce of gold? And what's actually really interesting here, to your point, Miko, about silver, the bounce back that's been aggressive, possibly looking for a breakout. Look, gold has had this massive outperformance in recent times, pushing us up to at one point 100. We haven't been at 100 in a long time. So gold, the gold to silver ratio, hit fresh highs here in the last few weeks. What that would signal, to me at least, would be that perhaps on a bigger picture term, silver has some catching up to do. When this thing gets really high, that tells you that historically, I mean, this is one of the most simple long-term, buy-sell indicators. If you're a metal, people who are big in the metals community, like people who buy physical metal, they look at this stuff all the time. They say when this thing is hitting really high levels, you want to be buying silver on a relative basis. It's cheap to gold. And then when it's low, you want to be buying gold because it's cheap relative to silver. So on a really long-term basis, I'm curious to see how this holds up. But I wouldn't be surprised if in a few years from now, when we're looking at this, we get something back down the other way, right? We could, over the long term, and that could mean both gold and silver go up. But the pace of silver, when it does truly go up, if it goes up aggressively, it could bring this thing back into a little bit more balance. So I do think on a long-term basis, it may still be, silver might be a bargain. Gold has momentum on its side right now, which can go on for some time. But over the long term, I would say silver kind of has the bargain potential compared to gold.
Yeah, this chart is beautiful for like a mean reversion.
Yeah.
And also silver is nowhere close its all-time highs, which gives you some levels to look at, which I also like. Let me just bring it up. I was looking at this recently. So if I go to I think it was the monthly chart. Yeah, like there are some levels that we can hit and aim for. So I think a play on silver could be really, really good, because as you showed on the chart, sooner or later, it's going to start catching up to gold, right? So there's a very high chance that it will start going up. And once it does, I think it would be a very good play, especially if the Edge Finder gives the confirmation as it's giving now. But as Miko mentioned, I think we do need to break these key levels. I would agree that we are still a bit flat, still a bit range bound, and we need that breakout. We need that bullish momentum to kick in. And then I think at this level, we could get a really nice buy setup.
Yeah, I like that too. I think there's a lot of, in a weird way, above 35, silver looks even more attractive to me personally, because then I'm like, okay, we might actually be seeing what we're talking about taking place, like that long term. We think that's likely to happen. Like you're going to probably continue to see that thing range back and forth, the gold to silver ratio. It's clearly on the upper limits of where it's been in the last few decades. So it's probably due to revert back, like you said, to the mean. But that can take some time. And maybe as a technical analyst, we can look for those signals in the price, right? Some breakouts to maybe take advantage of that. One other fun chart that I wanted to show you guys. This is the Dow Jones versus the S&P 500. And many people think that, you know, the NASDAQ is just going to outperform the S&P 500 and the Dow Jones forever. But what's actually really interesting about value stocks, which are more stable companies that grow slower but more consistently, versus growth stocks, which grow very quickly but have inconsistent and vulnerable growth levels, they actually take turns being the leader. In recent market regimes, it's been unfavorable to be someone who's like buying value Dow stocks, dividend stocks. Those things have significantly underperformed, as shown in this chart. But there are also times for multiple years, like for example, from the 2001 crash afterwards, Dow Jones did way better. After the 2008 financial crisis, the Dow Jones had a really good run relative to this. And finally, one other chart in response. And then again, we do all sorts of relative strength on this show. It's just fun to look at this stuff and understand. It really tells you a lot about the markets. Here's possibly the most diabolical underperformance in a long time. This is small cap companies versus large cap companies. This is the IWM small cap index versus the S&P 500, the big guys, right? This has been, it makes more sense. Like if you think, I can imagine, and this is just me speaking honestly, if I was looking at this in 2011, I'd say, I'm just going to be long small caps. Small caps grow faster. They have more growth ahead of them. Why wouldn't I be long small caps? So if I think about that and I say, okay, that's my investment. I'm going long small caps, and that's where my money's going. It's underperformed horribly for a long time. And now it seems obvious, and this is the dangers of markets. Now it seems obvious in my head when I look at this chart, I say, well, the big ones have more capital. They can spend more money on growth. They can buy the little ones. They'll win forever. The point is, markets do these crazy things where they convince us something is the truth, and then they screw everybody over. So just relative strength is fun for this reason. We do endless relative strength charts, and I know we have a lot of fun doing them between the three of us. It's my favorite part of technical analysis is relative strength, understanding how market mechanics work overall. So yeah. Any other charts you guys are really watching right now or
interested? I have a question for you.
Yeah.
So I noticed your focus is on the NASDAQ mostly, and you're looking to trade or currently to buy the NASDAQ. What's the reason between choosing NASDAQ against the S&P, let's say?
Yeah. So NAS specifically is weighted heavily towards the big guys, right? The Qs, which the QQQ is an ETF that tracks the NASDAQ. It's heavily weighted towards things like Microsoft and Meta and Apple. And right now, I still think those leaders are going to drive higher. They're kind of, from a trading perspective, I do typically, we've talked about this together as a group, do you typically favor the laggard or the leader? And when it comes to trading, I typically am more in favor of the leader. So when we talked about that silver concept that Miko mapped out, and you did as well, Marco, like I would love to see silver take that leadership, and that's when I'd be looking to long silver. But for me personally, and we each have different styles, I personally don't want to buy the laggard. I'd buy the leader. And then if that changes, I'd bail on the leader and change to the new leader. So, but we have different approaches to that. I know, Miko, you typically are looking more for like, you want that swap in leadership. You want to catch that breakout, which can be violent and can be very lucrative if you're on the right side of that. So everybody has their different style. But I like NASDAQ. I think it's the leader currently of the indices. If we do see a rip higher, I think they profit a lot from AI.
Yeah, and earnings this week. Earnings from the biggest companies, I think it's mostly like tech companies as well, so it could push the price even higher for the Nasdaq.
Yeah, Meta had a really good report. You can see it here. It is in the pre-market up, 7%.
Oh, that's great.
Microsoft also had really good earnings. Look at Microsoft, 8.5%. I wish I owned that stock. I do not.
I know Tesla had bad earnings and it still went up.
Yeah, Tesla, and that's the trickiness with the earnings stuff is like, it's all like, okay, how did you do in this previous quarter? But also, how are you planning to do going forward? And what's the big changes? So earnings are a madhouse to try and predict or try and trade around. But it's kind of like trading NFP for FX or for, futures and stuff like that. But just something to think about. Miko, I want to ask you, because it is always interesting to get that perspective. I think Marco and I tend towards a little bit more of like the leader, riding that momentum. You were looking more for the catch-up trades often. Is that right? I don't want to say that unless that's correct about your style of trading. Is that like, let's say you're looking at gold and silver, or you're looking at euro and pound, things that are kind of correlated. You're looking to catch the bigger, the better pullback, the better value. Is that right?
Yeah, that's kind of my thinking, especially in FX, because we don't tend to trend too often or for too long. So when something has gone for a while and then I can start to see it shifting, then that's kind of where I see opportunity, because there is typically, if it does turn around and we do see the correction of that, typically the move from that is going to be pretty big, or at least meaningful to catch as well. And especially for like gold and silver, or even euro and pound sometimes, but more so for like gold and silver. Typically, if gold's going to have a big move, potentially silver could catch up, or vice versa as well. And yeah, I think just by nature as well, I tend to drift to more of those type of opportunities, just because maybe it slept on a little bit, and then potentially we might see price going to catch up with everything else. Yeah,
no, it's again, there's great strategies that can be built around both, right? Catching the leader, riding that momentum, or catching the resurgence of the laggard. So all sorts of stuff to dive into in markets. We've run out of time, guys. We've got to go to our next stream segment here. We got Forex James taking over after this. Before we pass the show over to him, let me just remind everybody, if you enjoyed commentary from Miko and Marco, they come on every week. We talk all sorts of technical analysis. We've mixed in some fundamentals on our segment together, and I always look forward to it. So if you do too, you can find out more content from both of these guys. They share a ton of free stuff on their own respective YouTube channels. Miko Audu on YouTube. There is his channel on the screen. And then, of course, Marco's trading journey as well. Search them up. If you're on a television or something where you can't click a link, you can search them up on YouTube. And if you're on a desktop or mobile, you can just click the links that just got dropped in the chat. Make sure to go subscribe and check out some of their content. Guys, thank you very much for coming on today.
Thank you. See you next week. Goodbye.
See you
next time. Okay, guys, up next, we've got our next show host taking over. It is Forex James, popular contributor to the A1 Trading Show. And again, I'm hoping that if you're just a quick moment, if you're enjoying the show here, consider subscribing if you're new, hitting a thumbs up button if you're enjoying the content. And as always, make sure to go support our guests. They do come on out of their own free will. Sometimes we kind of, bully them into coming on, but no, I'm just kidding. They're always coming here by their own free will. I think we all kind of have the same love for trying to put out great content to help traders every day. So with that said, we're going to pass over the stream to Forex James. Stay tuned.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello, Kwang. It's not Chris. My name's James. Chris is on after me. Hey guys, how is everyone doing? Hope you're all well, enjoying your Thursdays. Slow markets today. We do have NFP and unemployment tomorrow, so expected to see some slowdown in the markets, especially tomorrow. Likely to see very little movement until we have the news. Okay, so open positions, pretty much the same as yesterday. The only unfortunate thing is Euro New Zealand was stopped at break even. I personally re-entered this, but yeah, I'm just sort of testing the waters again. I still think this is a great position to have open, but if it was stopped at break even, then I'm a little bit hesitant to jump straight back in. Australian dollar Swiss, I'll cover this one maybe later in the stream. Euro pound, this one has been a little bit difficult. The euro seemed to have had a bit of a sell-off yesterday. So, we went from pretty decent profit. What was it? It was, almost 1% profit on euro pound, and it came straight back to break even. Our euro dollar long is also not doing too hot. So, our euro positions have been tricky. I did say yesterday that we're a little bit overexposed. So it was always one of those risks when you've got multiple positions open on one currency or one asset, then euro is going to be exposed to a little bit more. Swiss. We're on Swiss yen. Scaled into Swiss yen this morning, actually, after the Bank of Japan rate decision. It came out slightly dovish. It didn't seem like they're really interested in hiking rates right now, which, again, is expected. I did talk about this yesterday. So I've used that as a benefit to scale into a longer-term position. Sorry, 1 second. I tried to have my fan on. I don't know if that was affecting the mic or not. So yeah, scaled into Swiss yen, but remember, this is a long-term position. I'm expecting to hold this one for months, maybe even a year, 2 years. So I've got absolutely no problem just letting this one run out. It doesn't affect me at all. It's very low risk. Watch list hasn't changed. To be honest, I'm not actively looking to place any more positions at the moment. My portfolio is pretty full, as I just showed you. I've still got some open positions going. So let me just pull up the Edge Finder here. So we've got, actually, I'll filter that. Don't care about neutral things. We've got the UK 100. We've got the pound dollar, New Zealand dollar. So it looks quite bearish on the US dollar. So let's have a little look at the dollar. Now, to be honest, I don't like to go against the Edge Finder because the Edge Finder is obviously based on data, so it's very hard to disagree with it. But in this case, I'm a little bit cautious about the dollar because I've spoken about this quite a lot recently, but I'm just very, very unsure of the current level that the dollar's at. I mean, we're at this fib level. Obviously, if we draw it from low to high, this is the golden zone, technically. So that's something I don't really want to sell straight into. We've also got this really strong level of resistance turned support. We've had a really strong wick to the downside last week. On the last monthly candle, showing that sellers haven't been able to really break below just yet. I'm not saying that it's not going to go lower. I'm just saying right now, I'm not 100% sure. I wouldn't really want to sell right now. As well as trade tensions between China, America, and Europe and America seem to be relaxing a little bit. So the last thing I heard about the trade war, if you will, was that Europe has got a plan that they're going to present to America. It seems like China and America are also in discussions or potentially about to get into discussions. So it takes a little bit of that pressure off. It seems, as far as I'm concerned, everything's priced in to the dollar now. It doesn't seem like there's much else really going on, as well as just the general price action. We've had a huge sell-off here with very little pullback. We had a very small move here to the upside, but then followed by 2 weeks of selling. Even 3 weeks of selling. So I would say that the dollar is a little bit oversold technically, and it doesn't really have any new factors to continue pushing down. But of course, that could completely change tomorrow with NFP and unemployment. So we will see. But yeah, selling the dollar right now to me is a little bit too aggressive. We are seeing a shift in risk as well. We can see the yen is down massively. Oh, well, not massively, but it is down. We've got the Swiss down as well. We've got the euro coming down and dollar up. We've also got gold coming down. And NASDAQ going to the upside. So very classic, very typical risk on market sentiment at the moment. So yeah, I'm not looking to be risk off. I'm not bothered about gold long. I said yesterday that gold long technically looked quite nice, but I just couldn't justify going into it. If we do have an entry, it would actually be where it is right now. I really like this level, but again, with the current momentum in the markets, the current sentiment, I cannot justify buying gold. So the recent developments have given investors a quite good chance to start taking profits, which is very clear has happened. We are still in an uptrend overall, so you do have that, but yeah, fundamentally, just can't justify it. Hey James, US dollar yen has touched 140. Do you think it's exhausted that run or may push lower? I wouldn't say dollar yen's going to push lower at the moment. I would love to say yes. I really like dollar yen shorts. Excuse me. But again, going back to what I was saying about market sentiment, we're seeing yen down, dollar up. It seems like there's just not really any reason to short dollar yen right now. We've had the Bank of Japan rate decision last night that came out quite dovish. So yeah, going short, to be honest, it would have to be a technical play because the fundamentals don't align for dollar yen right now. Yeah, I'm sitting quite flat. If we came into the previous highs, so around here towards 148, maybe I would consider just going in for a technical sell. But yeah, again, fundamentally, just no reason really. Nobody FX, the same thing goes to you on pound yen. It's exactly the same analysis. It's the same idea. So no reason to, in my view. I don't operi stocks. Diego. No, I don't touch stocks. Well, that's a slight lie. I do touch stocks, but not from my own analysis. It's from my other trader that does do stocks. So I'll take his signals, but I don't know anything about the stock market other than like the core essentials that obviously traders need to know. I don't know anything about any earnings or anything like that. I'm very boring. Hey James, enter DCHF is starting to go up on the Edgefinder +4. Max, I think the New Zealand dollar Swiss long idea actually is pretty solid. So obviously New Zealand dollar is a risk asset. We've got the Swiss as a risk off asset. So if we are seeing that shift in sentiment towards investors going back towards risk on, New Zealand Swiss is a great play. Because, of course, the Swiss has been used as safe haven. So if we look at how the Swiss has been moving recently, obviously, during trade tensions, we had a huge rise. Now we're having a little bit of a fall because that fear really isn't as it was. So this makes complete sense. I do really like it, actually. And to be honest, I might look to get in. It's a little bit early for me. So if I was going to buy this market, I would need to see this trend change, indicating at least a short-term trend change. And then, obviously, with a higher price pullback, then start looking to go long. Right now, probably not, because I'm fairly sure. Dailies against us, daily, weekly, and monthly are all bearish. So it's not something I'm going to get into huge positions on. I'm not going to sit here and say I'm going to take it all the way back up to the previous high at 153. 0.53. But maybe just a short-term long to get a correction of that risk move or that risk-off move to something like this to just rebalance. I think is completely fine. Do I trade oil? Not much. I will look at it. I pay attention to it, but it's not. I don't do much analysis on it at all. And to be honest with you, I'm really annoyed about oil because I was looking at this and I was I've been very, very unsure about oil for a long time. And I saw this, and the technicals for me were perfect. This is a great trade setup for me, but I just didn't have much of a reason to go and short it. So missed. Pretty much I missed the entire trade, which is unfortunate. But very clearly, oil is bearish. I mean, it doesn't take a genius to see that. So to be honest, I would continue to short oil on pullbacks. I don't see why you wouldn't really just follow the momentum. Gold taking a breather. Yeah, I'm not sure gold's going to change trends. I'm not saying it's going to have a huge reversion downside, but I would be very cautious about buying it where it is. I think EUR USD is going down, to be honest, DXY. Yeah, Med, I would completely agree, actually. It wouldn't be a surprise to me if euro dollar does head to the downside. I think it's very overvalued for what it is. There's no real reason for the euro to be at the price it's at. The dollar, again, as far as I'm concerned, seems to have priced in all of the developments in terms of global macro. So, Yeah, I think euro dollar downside makes a lot of sense. If we look at the euro dollar chart as well, let me just go into a clean chart. Let's just go to FXCM. There's so much room here to get corrected. It would be a huge shock to me if this doesn't get at least somewhat corrected. We've got huge left side traffic here that I would like to see get corrected. I'm not going to say it's going to come all the way back down to the 1.04 level, but it could, have something like this where we just have a bit of a reasonable pullback. But we will see. That's quite a big move to try and call when I'm not. Yeah, we'll see. That's the point. Any thoughts on pound Swiss? It's the same idea as the New Zealand Swiss trade that I just discussed. I think it's a great idea. Investors turning back to risk assets. I mean, you can already see it in the price action. This one probably has a little bit more of a chance than New Zealand dollar. New Zealand dollar Swiss, in my view, just because it looks like we've already got the trend change or about to have this. So I'd be quite happy to buy pound Swiss on this next pullback. It might even be this 50% pullback. Look at that. I'm that good at trading. I can just draw 50% pullbacks without even trying. It's just a skill. Can't help it. So yeah, I'd be quite happy to buy on a 50% pullback on pound Swiss. Actually, I'm going to add this to the watch list because that's pound yen, but pound yen works as well. Pound Swiss, yeah, actually never mind. Pound Swiss technical doesn't look great. Sorry about that. I was looking at the wrong chart. But the idea is still the same. I think pound Swiss is also a great buy, but again, I'd need to wait to see the trend change. EU to 1.12. Alan, we will see. I mean, my long position would quite like it. If we could see euro dollar continue higher, but yeah, we'll see. After the huge sell from Head and Shoulders from the 4-hourly time frame, I've noticed a huge rejection from the downside. Wouldn't that be an indicator for a long buy? No. I don't know what chart you're looking at, but no. Technicals aren't a signal to go in or out. Aren't a signal to go long or short. Technicals are just to get into the trade. In my view, anyway. Are you bullish on euro pound? I am bullish on euro pound temporarily. I love to short euro pound. It's a great mean reversion trade, a great mean reversion pair. But yeah, just I think with the way the markets are right now, I'd be quite happy to go long euro pound. Although I think it's bearish on the edge finder, isn't it? Let me just double check. It is actually. It's pretty much the only decent bearish read-in. So it's me versus the edge finder right now. Let's see who wins. Are you referring to gold? No. Gold, in fact, everything is driven by something. What is driving gold? Why would a market mover, let's say, why would they go and buy gold? Well, they're not buying gold because it was a Head and Shoulders or whatever it was you were referring to. They're buying gold because there's some risk in the economy. There's global tensions. There's something going on. They want to go to a risk asset. And the same thing applies to every market. There'll be a reason to go into that market, and a technical thing generally isn't, especially on the H4. Maybe if it was like a monthly 200 moving average, I would kind of get that a bit more. But Amazon owning at 5. Is it time to buy today? I don't know. How would I know that? US 30 is also a good spot to go long. It is very bullish, apparently. So let's have a look at US 30. Potentially, yes. I really like the level here. This previous resistance. I suppose the way I would, if I was going to buy this, I would also, I've spoken about it a few times. I'd need this trend to change, then the pullback, and then the continuation. So I'd look to enter into this market once we've had that trend change. Right now, it's a little bit premature for me. I don't really, there's no technical entry here for me. Loaded up on eggs. Look at Alan, real smart investor buying eggs. Yeah, Med Dali, I agree. What would it take for the dollar to continue its downtrend? I would say a deterioration in trade talks. So if we saw the the China and US discussions take a turn for the worse, so if China turns around and says we'll put 500% tariffs on the US, and Trump turns around and says we'll put 1,000% tariffs on you, that's going to be pretty bad. Same thing with Europe. If the trade talks there don't work out, and if that whole 90-day pause just ends up to just make things worse, then yeah, that would be a deterioration on the dollar. Also, if we see weakening in data, so if we continue to see, if we see NFP and unemployment come out tomorrow quite weak, that would also contribute to a downside on the dollar. USD CAD. I don't mind that in theory, because we do have oil that's taken a real hit over the past couple of days. Dollar is potentially making a comeback here. Well, the market is down actually. Let's see. The daily trend's about to change, which isn't great for me actually. Although this does look like a really good break and retest. I mean, we've got a really strong level of resistance through here. We've broken above. Could be the retest here. We'll see. But yeah, the daily trend change is a little bit of a red flag to me. So yeah, I'd be very cautious on technical side. I think fundamentally it's okay. How long do you usually stay in trades? It really varies, because I've got two strategies that I use really. I've got one that's sort of intraday DCA. That one, it could be 15 minutes, it could be 2 or 3 days, depending on how the trade develops. Or my swing trading strategy that normally about 1 to 2 weeks, maybe a little bit less. Why are the headlines always in talks with trade negotiations? Why is it simply not a phone call, get a resolution? Because it's not that simple. When it comes to geopolitical things, it's not a case of, you sit down, give Trump a call on his mobile, and or FaceTime or something like, yeah, let's just sort this out and have a beer. It's a bit more complicated than that. I think there's many parties involved, a lot of contracts and paperwork involved as well, lawyers, legal stuff, and there'll be all sorts of moving parts behind the scenes that we don't really think about. And also, it's a negotiation, so it'll be like, you get in contact with Trump, he would go and talk to his advisors. What do you think about this? Well, hey, how would that work? Then they would come back with something, and you do the same thing, and it's a whole thing. So that's that. I'm a day trader. My trading calls are pretty decent. My TPs are also in great spots, but I don't hold. Last 2 days, I called 5 trades. I left before TP, and they all hit TP. Then stop closing trades. If you know the stats, if you've got I think this is one of the key problems really with traders, is when they say things like that and they say, oh, I always close trades too early, or I do this or I do that. It's because they don't know what to expect next. So you close in a trade because you have no idea what's coming next. And that's fine. It's fine to not know, because no one knows what the markets are going to do. But you should have a sort of percentage or some sort of idea of what statistically happens next. So you should have 5-10 years worth of back tests and say, okay, out of the past 10 years I hit take profit 40% of the time, I can make a profit 20% of the time, and then I lose the rest of the time. So at least then you can say, okay, well, if I hold it open, there's a 40% chance I'm actually going to hit take profit, or whatever it may be. Obviously that's just an example, but you should be able to have confidence in what you're actually doing. If it's not that, then yeah, it's probably a greed problem, like Bash said, a bit of discipline issues there. But the thing is, it's like if you know statistically that your trades often look like this. So let's say 65% of the time you buy here, stop loss there, take profit here, and this is how 60% of your trades look. So you will have a little bit of drawdown and then take profit. Obviously, I'm simplifying it massively. But this is how your back tests look. This is what your data tells you. Then you're in a live trade and it looks like this. and you just take profits here and then the market runs. Why have you done that? You know that this is the majority of your trades or the stats, but you've just taken profits for absolutely no reason. You're cutting yourself short. You're ruining your back testing stats. You're ruining your live account stats. So yeah, to be honest, you need to give yourself a bit of a shake. Yeah, it could be a sizing thing as well. This is another problem. It's very difficult to give like a substantial answer to stuff like that, because it could be so many different things. It could even be a time constraint. You know, if you go to work and you place the trades before you go into work, it could be I don't want to have to sit through this while I'm at work, so you close. I mean, stuff like that. It could be quite literally anything. So giving you a reasonable answer that would benefit you can be challenging. Is trading news beneficial? Because I'm a logical trader, I trade what corresponds with my setups, and my setups keeps confirming buys for longs. Would you trust the news or your setups? What does that mean? News can go either way. I'm not going to trust news for a trade idea. If that's, yeah, I'm not sure. Do you mean like if you see NFP tomorrow, you're going to buy the dollar? Or I'm not 100% sure what you're trying to ask there, to be honest with you. But no, I wouldn't trade or trust news in the way that I think you mean. EJ has been horizontal. Yeah, I'm fairly sure EJ has just been range bound since tariffs, hasn't it? Because obviously the euro has been very strong and the yen's been very strong. Yeah, it's just very range bound at the moment. Pretty similar to Swiss yen, actually. No problem, Max. See you later. Have a good day. You risk 0.5? Yeah, 0.5. 0.5 is fine. I normally risk about 1 to 2%, so you're risking less than I do. What's your analysis on pound dollar? Good question. Let's have a look. Where's my edge finder gone? Here. It is bullish. So to be honest, just on the back of that, I'm not going to sit here and continue to watch for this 50% pullback. I just don't think it's happening. This 200 moving average has now exceeded the 50% pullback level, so I'm going to scrap that. I would be looking for two things. I would either look to go long pretty much where it is within this sort of support level, stop loss relatively tight, somewhere like that. Or the second option is waiting for price to possibly come down into this 200 moving average, then continue higher. It really depends how aggressive you want to be. But again, based on just the data at the moment, I think it makes sense to go long. But in my personal view, I would stay away, because I do think the dollar is going to gain some strength temporarily, but I think it will do quite well, especially if tomorrow's news comes out positive. Bashi, I appreciate it, but where does that come from? Why are you being nice, Bashi? That's a strange thing. The best GP USD position I see is a retracement TP 130. Oh, okay, I see what you mean. So are you talking about shorting it into 1.3 here? Shorts could make sense, but this H4 trend is just, it kind of ruins shorts for me. You could go in for sort of scalps intraday positions, but swing shorts, yeah, it kind of makes me a little bit uneasy. Oh, ISM. My bad. Hold on. Let me give me a second. Sorry. Where are we at here? Yes. Oh, no, it's Canada. I've still got 13 minutes. Yeah, the way you guys were talking, I thought it was now. He's at 3 p.m. Yeah, don't worry. I will do news at 3 p.m. Oh, you're waiting for 1:30 to buy. Okay, yes, that makes a bit more sense. Yeah, we'll do an all markets view. Alan says ISM 50.2. Is that the forecast or no? Is that just what you're guessing, Alan? Oh, it was 50.2. Ah, okay, I see what you're saying. Right, my bad. Getting confused here. Oh, right. Okay, let's see. What do we have going? Silver. I would love to buy silver. I really do think it's got a lot of potential to go higher in the long term. But right now, again, with that risk, the shift in the risk sentiment, it just doesn't really make any sense for me to go long on silver just yet. But on the other side, we could look into the industrial aspect of silver and see if there is any long opportunities. Hold on, I think my calendar isn't showing anything. Let me go to Forex Factory. Oh, right, it did. Okay, so we've got final manufacturing PMI 50.2, so slight deduction or slight reduction in forecast and previous. But yeah, the ISM manufacturing PMI 48, previous 49, so we're expecting a decline there as well. So yeah, we might see some pressure on the dollar actually if we do see manufacturing come out lower along with tomorrow's news of NFP and unemployment. What's my opinion on silver right now? Zed, not much really. I think it's very undervalued in the grand scheme of things, but it doesn't mean I would want to go and buy silver right now. I think it's under a little bit of pressure because of obviously the shift in risk sentiment. But there is obviously the industrial side of silver that I haven't looked into just yet. So there might be a reason to go long on silver, but I need to do some research on that beforehand. But as it stands right now, no plans to go long on silver. If we stay above $50, should be fine. Yeah, we'll see, Alan. the way things are at the minute, I'm not sure. Yeah, I would like to see the dollar continue higher. I mean, this looks perfect, and to be honest with you, I'm really tempted not to buy the actual dollar, but to go long on something. I'm not sure what yet, but maybe just a little bit of a, I guess you'd call it a gamble. See if the dollar can remain above sort of the 100 level. What positions am I in right now? So I'm in Swiss yen shorts still, Euro dollar long, Euro New Zealand long, Euro pound long, and Australian dollar Swiss short. Yeah, it would be good to see a beat, but who knows? Who knows? Yes, we've got 10 minutes. That's fine. You know what I'll do? I will go side by side view. So at least then I can't forget. All right, we'll do that. So we've got DXY, so we've got the dollar index on the 5 minutes, we've got the S&P on the 5, we've got oil on the 5. Oh wait, sorry, that's 5 months, not 5 minutes. And we've got gold, so you can see. Aussie elections this weekend. I didn't know that. I'll have to have a look. Cedric, hello. Why do I look like I'm streaming in a cell? I don't know. Just a white wall. Isn't that a break and retest on the DXY? Not really, no. Not in my view, anyway. because this level isn't. It's not really. I don't know how to explain it, but it just doesn't seem that way to me. I think that's more of a discretional view rather than it being like a set thing. But I wouldn't consider I guess it's because we've not seen it drop enough. If it dropped a little bit further, then came back up and retested and continued lower, that could be a retest. But when it comes down and straight back up, or at least down pretty much like this, I wouldn't consider this a retest. But again, that's just my view. It doesn't mean it's the law or the rule. US dollar Swiss longs, US dollar yen longs. I like dollar Swiss longs. I think that's a really good play. I am also considering dollar Swiss. Yeah, Alan, I agree. I think dollar CAD's a little bit messy. It's not something I'd be too interested in getting involved with right now. What indicator is the most important according to you when trading? Which ones do you use? I use different ones for different styles. I'd say for swing trading, I love to use the Fibonacci retracement. So I'll always look for a 50% retracement. If I'm doing intraday positioning or intraday trading, I like to use the RSI. Yeah, Alan, that's exactly it. So yeah, I think dollar Swiss is probably the best option that I can think of right now. Unfortunately, I think I might have missed the ideal entry, but I would be willing to go a little bit more aggressive on dollar Swiss. So if we could see a break of these highs, then a pullback and a retest of this level, then I might look to go long here and continue higher. I think that's pretty much all I can sort of think of at the moment because this market is still bearish. So it's not super clear. You're long on dollar Swiss at 0.816. All right, so you entered around here. That's beautiful, actually. I'm a bit jealous, Alan. You could have at least told me you were taking that, so I could have joined in. I asked Chris to look at it. He said, stay out of that for now. Yeah. What, in dollar CAD? All right, yeah. Yeah. Yeah, don't blame him. You have to invoice me? Okay, fair enough. Alan, how much? Brian, my position is long on euro dollar. Take on Swiss yen. I think short-term upside, but I'm still quite happy to say downside long-term. So I scaled in this morning. So I've got two positions now on Swiss yen short. So yeah, just letting it run. Alan, 15, that's fine. I charge my clients 20, so I'll still make a profit. Is TradingView's calendar icon show up? I don't know. I don't use TradingView's thing. Where is their calendar? I think it's here, isn't it? To be honest, TradingViews looks a lot nicer, but I don't know. Forex Factory is it's a staple, isn't it? It's yeah, it's like the bread and butter for traders. The short GU at 1.33907, very nice. Yeah, very little ahead of news, which is obviously expected. Dollar's just sideways. So what's everyone thinking? What do we think ISM manufacturing PMI is going to come out as? I'm going to say, I'm going to say 47. No, 40. Yeah, no, 46.5. Complete guess, but we'll see. What's your opinion on the news? What do you are going to do? Brian, I think your name is. Well, I don't have a plan or an opinion on news. It's just, day-to-day news, it happens all the time. You just got to, see it, sit through it, deal with it. I don't really have an opinion either way. News just pushes price to where it's supposed to go. It's the most ridiculous thing I've ever heard. I mean, obviously, price is going to go there because that's where it goes. It's like I don't know, it's a weird thing to say. Dollar bullish with this news, okay. Do chase bank traders look for fair value gaps? Yeah, of course they do. They sit there, and as soon as you join an institution, you join as an intern. They'll tell you to get coffees and stuff, and then once you've done all the coffees and the food run and printing and all that boring stuff, they'll sit you down and say, look, we've got 400 hours of ICT content for you to go and watch. So, that's why they earn the big bucks, is because they know how the markets work. If recent news is anything to go by, probably lower. But then, that's what I'm thinking, Lee. I think it's probably going to be lower. But Sean, I would tell you about this algo, but the UFOs will come and probe me again. I don't want to deal with that. 2 minutes. Brian, no, I'm not trading news. Well, I've got positions open, but I'm not actively trading news. I'm not going to sit here and, scramble to place a trade because, manufacturing's coming out. Well, if the number comes out red, then likely NAS up, gold up, dollar down. What is your understanding of consolidation happening with gold? The nonchalant trader, I got to say, all your capital letter sentences are not very nonchalant. It's coming across quite aggressive. So maybe fix that. But gold seems to just be taking a chill pill, to be honest, after market sentiment shift. I've said it a few times now. But yeah, it seems like everything's priced in. And if anything, trade talks are improving a little bit. So seems like it seems like gold doesn't have much of a reason to continue that much higher. Not really trader, it's all right. Don't you worry, I'm only messing with you. I don't care if you use caps or not. Just don't spam and we're good. Do you have institutional experience before? Yes and no. So what happened was I created this algorithm back in the 1800s. The Japanese, they were like, we want to make these candlesticks, James, can you help us? And I was like, you know what? Fine, I'll do it. But, if you want to consider that institutional experience, then, But no, in seriousness, no, I don't have any institutional experience. We've got an analyst that is institutional. We've got a trader that's also SEC regulated or licensed. So there is that. But me personally, no. I'm just a degenerate retail trader. So we've got ISM coming out now at 48.7 beat. I got that completely wrong. What did I say? It was 47.5 or something. I said something lower, didn't I? So dollar up off the back of that. We've got oil not really doing anything. Gold's down. We've got S&P also not doing very much up. Dollar's doing quite well off the back of that. ISM manufacturing prices came out to 69.8 compared to the 72.9 forecast. So it's not great, but of course we're paying attention to the ISM manufacturing. So the manufacturing of the US, so what the US is essentially creating is great. Oh, well, not great, but it's improved 0.7 since the previous 0.7 compared to forecast is what I'm trying to say. So that's good for the US dollar. It's a good sign for the economy. So yeah, all good. Actually, yeah, sorry, I completely missed that. It is below 50, so it's not actually all good, but swings and roundabouts. It's above above forecast. So there you go. Although below previous, so it is what it is. Ball Out's decided to show his face. Welcome, Ball Out. Good to see you. So yeah, actually very little off that. I mean, it's a bullish move, but remember this is the 5-minute time frame, so very irrelevant really. A 0.16% gain. Yeah, very little little movement off that, but dollar up still. So although it's below 50, it's still positive, because the way it works, I assume most of you know this already, but for anyone that doesn't, the way news works is during this period, this is people placing trades. In fact, maybe not this period specifically, but before news, we have a period where people start pricing in what they expect, and that's what the forecast is. So because even though it was lower than 50, it's still good for the dollar because it beats the forecast. So people were selling, they will have closed those sells and gone long or whatever else, you know, kind of just the way trading works. So hopefully that makes sense. Tried to make that as concise as possible. Ball out was held up with tasks. That's unacceptable. You should have the A1 trading calendar linked to your Google Calendar. When you see Forex James pop up, you should be dropping everything and coming to the stream. It's just unbelievably rude, to be honest. Wear your cape more often, problem solved. I don't know if that was to me, I'm not sure. Anyway, that's the fun and excitement done for today. So there we go. Back to these slow markets. Okay, let's get rid of that. Oops. And this, and there we go. Okay, so let's have a look and see, what did gold do? Yeah, nothing really. Although, yeah, gold looks like it's going to continue lower. I wouldn't want to buy this, to be honest. It looks precarious. It's like sitting on the edge of a cliff here, because if we break lower and break this 200 moving average, we have a lot of room here really to continue lower into, so back into the 3,000 range. So I don't really want to deal with that. So I might just chill for a bit and ignore gold. Ever heard of the Baltic Exchange Dry Index? No, I haven't. It's funny, every now and again, I'll be sat here and someone will just bring up some really strange thing that I've never heard of. Maybe it's me being a bit of an ignorant trader, but... Oh, it's for shipping? What's the ticker? Dry bulk. Of course, Sean's heard of it. Sean, you're a bit of a nerd, aren't you? Bitcoin continuing higher. I was interested in Bitcoin yesterday. I say it all the time, but crypto, specifically Bitcoin, is not something I ever really pay much attention to. It's just not that much of an interest for me. I don't really know anything about it. But sometimes, very rarely, there'll be a technical setup that I can't really ignore. And there is one here. Well, actually, it's kind of been broken now, but I think this would actually be quite a nice long opportunity. So I am just watching Bitcoin loosely just to see if we can get a 50% pullback. Then I might consider going long on Bitcoin, possibly back into sort of the 100-ish, wherever that is around here. So we could do that. World Trades, hello, good to see you. Lee, it's a new one for you too. Good. I'm glad I'm not the only one that has never heard of that before. Do you ever get a amount of profit per day? No. My rough goal is 4% a month, but because excuse me, because if you do 4% a month, that's 1% a week. So it's just one-to-one trade a week, which when you break it down like that is actually very reasonable. But reaching 4% a month consistently would put you in pretty much the best of the best traders. So it's not realistic to expect that every month, but in my view, it's a reasonable goal or a reasonable target to have in mind. But I would never chase it. You know, I'm not going to sit on the 15th of the month and say, I'm halfway through the month and I'm down 1%. I'm going to over leverage to get to 4%. That's ridiculous. But, you know, if I reach 4%, I'm going to chill a little bit, you know? Hi James, why are all the yen pairs popping off? Because we've had a shift in risk. So investors are taking the capital out of safe havens like gold, yen, Swiss, and putting it back into risk assets like the NAS, the dollar, and the S&P. I don't know why I'm itching for a long buy. That sounds like addiction. There's a very fine line between addiction and dedication. Are you work shipping? Okay. I think that gold 60 tap is still on the card. What do you mean by gold 60 tap? Yeah, I'm not sure what that means, to be honest with you. I'm in BTC. Can you tell me what should be my target? To be honest, I would be looking for about 100,000. I think just back to that psychological level would be fine. But I'll be honest, you should already know what your target is going to be. If you're in a trade, you should already have the exit, the entry, and the take profit planned. Who's Jimmy? Because I know you're not calling me Jimmy. You can trade vessels for freight like you can commodities. Interesting. You trade vessels. Gosh. Everything's tradable. Jimmy. Okay. I'm really annoyed about this NASDAQ trade. I'm fairly sure it was on this stream yesterday that I was talking about NASDAQ longs around this level. Unfortunately, I mean, I clearly didn't take it, but that would have been a great trade. So if anyone did take that, you are welcome. It's just another James classic. Want to know more? Now you know. That's true. Is data good or bad for gold? Do you mean the data that just came out is bad for gold because the dollar pushed up on the back of that? So you can see gold's had a little bit of a downturn on this H4 candle, but nothing major. I mean, the news wasn't anything too crazy. You know, it'll be pretty much ignored from now. So priced in, then repriced as the news came out, then pretty much done. Yeah, I've got to say, Lee, I will, yeah, trading a vessel on an exchange. How does that even work? Can you get shares of a vessel? Or what? How does that work? I'm sorry, I can't pronounce your name, but I think that should be my new online alias. So if I buy a share of a vessel, do I get like the I don't know any terms for stuff like that, or like the front half, or like the steering wheel or something? How does that work? How's the health journey going? Yeah, it's all right. I'm can't talk. I'm in a calorie deficit at the moment, so I'm just gonna get used to that. Then we'll see what the next move is. Who's there? Okay. I see. That's a good way of telling me how to pronounce your name. I appreciate that. You have a cargo. You have a cargo that you need to get from A to B, but you don't have a vessel. You can hire a vessel for a journey, as an example. Right. Okay. So I can just go to a charter. You take beer every day? No, not every day. Quite rare, actually. I don't really enjoy drinking, but you know, if it's a hot day in the UK and I've had a good trading week, I'm going to go and have a beer. You know, why not? You only live once. I told you, bro, US dollar yen going back to all-time high. I'm not sure about all-time highs. You're way too early to be asking me to buy you a coffee for that one. We will see. I mean, we've still got a lot of room to go. Also, how long is that bet on for? We need a deadline, because you can't just have that forever. So you've got to give me a time that you think is going to get back to all-time highs. What's my forecast on gold? I don't know. I'll be honest with you. I really don't know. Right now, the way things are, I would expect from here slightly higher move into this level, then continue lower. If we don't get any deterioration in trade talks and the data tomorrow, so unemployment and NFP, come out positive for the dollar, I really think we could be heading back down to around 3,000 on gold. But excuse me, if we get low NFP and high unemployment, and if we get some sort of news that the trade talks are not going well, then yeah, gold more than likely going to continue higher back into the previous highs, maybe even higher. I mean, I'm by no means saying gold is going to just change trends, but we could see some sort of pullback while we are waiting for developments. Euro yen long swing for a few weeks. Yeah, maybe. Look at the H4, it's trying to reverse back to the top of the range. What's trying to reverse back to the range? Gold or dollar yen? Okay, so you're just going to keep that idea open forever, that it could just go back to all-time highs. I don't think that's a fair bet. Okay, so you go by June of next year, James, USD JPY has been took out all-time highs. Okay, fine, I'll take that bet. Wait, actually, do I want to take that bet? Yes, I will take that bet. Oh, you meant short euro yen. Okay. I don't know. I'm not confident on yen positions right now. I think, to be honest, short yen is probably the play short term. Long term, I'm still very bullish, but I can't deny that right now the yen is bearish. But that's good for me because it lets me buy more yen. Good perspective. So for intraday buy will be more favorable. What, on gold or I don't know. I've got no interest in buying or selling gold intraday right now. To be honest with you, it's yeah, not for me. Alan, don't tell him that, Alan. We just made a bet, and that's my theory, Alan. God, you don't, you wouldn't cheat in a horse race and go and tell the guy that the horse is lame or something, would you? God, ruining my bets. Yeah, that's the thing. So the dollar yen carry trade was a huge deal. It was a brain dead trade for a long time. But yeah, I mean, with the yen, sorry, not the yen, the Bank of Japan's coming out to, or has already come out of negative interest rate policy. They're on a path to normalization. I can't remember what I'm actually talking about here. Where was I going with that? What was I? Sorry, guys, it was a bit of a brain fart for me. It's the end of the week, so I'll just put it down to that. Oh, that was it. The carry trade, yeah. So all of that, the carry trade is kind of dying because the swaps you would have been getting paid on dollar yen is now significantly less. So all of the positions that people have built up buying dollar yen to benefit from those positive swaps are going to start getting taken out. They're going to start taking profits. And they might have already started doing that. So like we saw the dollar yen, where is it? Let me find it. Back in July when we saw dollar yen essentially just collapse. Where was it? Yeah, right here. So this wasn't just because of, whatever it was, like the intervention or rate hike. It was because those things then led into that carry trade unwind, which is why it was such a big deal, because it was people just taking profits, getting out of the positions. Obviously, that was very quick and very aggressive. I expect a very similar thing to happen, but slower and over a longer period of time. So we'll see. I mean, I could be totally wrong, but that's trading. I'm putting my money where my mouth is, and we'll see. But obviously, I'm doing it via Swiss yen, not dollar yen. Are you going to stand on it because you're long at 142? 142,699. It's a solid entry. I can't. Yeah, I'll give you that. So it's a good area to be long. But I really don't think we're gonna. Well, yeah, I don't know. I just don't really think we're gonna go back up to 161. Although we've got to establish a rule. What happens if it goes to 161, then dumps down to 130? What's the result then? Who wins? Although I'm fairly sure you said take the highs, so I think I'd win that one, because if it didn't take the highs, then long UJ at 141, but I'm definitely going to flip short right at the right level. Alan, perfect stuff. Yeah, I've been slacking a little bit on my my positioning, to be honest. I should have been anticipating going long on dollar, but I just didn't. I did it on my prop account. I managed to benefit quite nicely from euro dollar shorts, but for swing trades, I've not really got anything going that's long dollar. Anyway, we do have Chris Pulver coming to take over the show shortly. He's not here yet, but he will be in a couple of minutes, I would assume. Yeah, I think, as I said earlier, I think the dollar bearishness is kind of done. I think it's all priced in, or majority priced in, at least until we have further developments on the trade talks. But anyway, Chris is here to take over the show. So guys, have a great one. I will see you all very, very soon. I think I'm on tomorrow as well, so I'll likely see you tomorrow. Have a good one. Stay on camera. Stay safe. Don't get margin called. Have a good day.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Thursday. Markets all excited with a little Meta and Microsoft leading the way with Mag 7, both showing some solid earnings. Microsoft especially, top three companies ripping to the upside. Had a nice little winner today on Microsoft. That was, so I put in an earning, or it was an earnings based trade, and I basically did debit spread. It crushed it to the upside, $1.30 with a max profit of $2.50. I closed it out this morning for $2.40. So took out all but 10 cents of profit on the trade. Net pretty happy on that. I also closed out some shares of the SPY this morning. I bought shares at $4.96 on the SPY. I am closing out some shares. I know that this may head up a little bit higher, but I don't know if we're going to all-time highs, and I'm not going to take the risk. I had a nice little chunk of profit across the board, up around 13% of this recovery, and I'm taking it. So just in case, this has been a great run. I have de-risked, de-leveraged quite a bit. I'm now sitting at 1.7. I mean, my gosh, at some point I'm going to look at this and say, like, I guess I need to deploy some capital. But 1.7 out of 3.1, I'm at 54% cash in my portfolio. So that's okay. I mean, it's been a de-risking, de-leveraging, take profits along the way. This entire run has been pretty lucrative. So had a nice little bounce back, a lot of accounts in double digits, and pretty happy with that. Taking some nice, daily income as well. This is the trade that I set up this morning on the SPX. Price was cooperative. SPX surrounding it with a call side, put side play, and I grabbed about, I guess I got $1.05 net per contract. So, or I guess I take that back, about 50 to 55 cents per contract. So anyway, grabbed a couple bucks there, And that's it. Like this green line that I mentioned early in the week, this is a gap fill from the 2nd of April. And this red line is a gap fill from the 22nd. So the market keeps humming along. Recovery, oh so great. But I do wonder with Mag 7, again, today we have Apple, Amazon. They also could give this market a late boost. Then we have non-farm on Friday. Is that going to be a bit of a head fake? I mean, yesterday was certainly a head fake. You looked at negative GDP, then you had the core PCE. I don't know who the heck said it yesterday. Somebody in the administration said, like, it was the best negative news I've ever seen. It's like, I don't even know what that means, So it's certainly the age of spin right now. The current administration is trying to make everything sound like it's not their fault, right? I think literally Trump in 100 days of office, whatever he was doing yesterday with his little tour, took to Truth Social, is that what it is, and said that this is Biden's market, when literally he claimed that it's going to be Biden's market, or it's going to be Trump's market because he's taking over the stock market. It's going to boom. It's like, the guy is human Teflon. If you can picture Neo dodging bullets, that's what Trump's been doing since 2016. But hey, whatever. So I just don't think the coast is clear. I'm super happy that the market has not just been beating up these lows and we're just sitting here struggling with like red and red and red. I mean, this is fine. All I'm saying is just be prepared for this market to not just go straight up. Okay. I mean, if we go to a V bottom, I'll just type it out. Like, if we go this level, pull back, and this is a cup and handle, and this is going to measure out to be a cup and handle, we get to these highs, anything to the upside, I'm not going to short that automatically. I'm going to hedge it. I'll probably hedge it out for 12 months. But I would say that this is going to be asset bubble territory. So not immediately at the all-time highs, but higher. Like if we get to, I mean, look, every major analyst, every major investment firm had like 6,500 S&P, 6,900 S&P, 7,000 S&P. Those have all been revised down to like maybe getting back to all-time highs is going to be the target for the year, right? And the markets do whatever they want. Like at the end of the day, look, the markets are right. You're not, right? You are either right or wrong with what the markets are doing, but the market's always right. So if we get into all-time highs and higher, I will just be, kind of patiently waiting for some type of topping pattern. It may be something I've got to look out 1 or 2 years, but I think we're going to go into another kind of asset bubble. And again, I don't know what that catalyst is going to look like, but I just know earnings can't sustain these like all-time high valuations, especially if it's a narrow bull market. So that's the one thing we are having right now is it's not every company that is leading the way. Right now we go to market breadth. That would be, I think it's S5 right here. So the S5FI, the stocks above the 50-day. So we went from basically 4.5% of stocks were above the 50-day to now 42% of stocks above the 50-day. Okay, how many stocks are above the 200? About 35, almost 36%. So we still, I mean, by and large, if we have a 200-day moving average, which oftentimes serves as a massive buy zone or sell zone, we still have most companies below the 200-day moving average. 65% of companies below the 200-day moving average. That is a bear market indicator. So if this is a recovery, I do wonder if there's another pushback down. So that is why I'm taking profit. That is why I'm protecting, some nice gains off these lows. I mean, we're up like 16, 17% off the April 7 lows. I know not everyone called that low, but it wasn't awful. I mean, we saw previous highs in S&P would have been January 2021. There's your high, right? Or I'm at January 2022. So there's your high. It would have been November of 2022 or November 2021 in the NASDAQ. But that previous all-time high was a beautiful technical support level. I did get in shortly after that. I mean, we bottomed. I got a 496 fill on SPY, and I benefited through most of that run. So SPY at 496. So right in here. And up around 13%. So I didn't miss much. I think that's pretty good timing. And just in case we have some gap fill, maybe a gap fill, maybe this 200 moving average is going to act as some resistance. Maybe this is the bear trap or the bull trap that I talked about, which is a low to high, higher low to higher high. We run into some symmetry. This to me would be like a bull trap territory. look, if I'm wrong and prices just continue to melt up higher, that's fine. I will still make money. Okay. What I don't want to see is have potential profit and a lot of option trades that are looking really good, and all of a sudden the market turns south and VIX goes up, and all of a sudden things kind of blow out a little bit. So I'm closing a lot of profits. I am lowering my beta weighted delta. So this is one of the lowest I've seen in about 6 months. So that's good. A lot of cash ready to deploy. That's good. So anyway, and I did have a close call yesterday. It was, I'll just be quick on this, but basically I run a session every afternoon from 3 to 4, call it the final hour. And usually I don't have a ton of trades going into the afternoon, just kind of a recap of the day and trades and what's looking good. I'll try to find some fresh trades. Anyway, yesterday with this market on GDP that was negative, we were down 2.2%. All right. As the market was correcting, I thought, okay, I could see the market, maybe coming back up like all day, just kind of slowly grinding to the gap, but then, fill the gap and reject. Well, it did. It just happened to do it in the last like 30 minutes of trading. So, I mean, literally my final hour, 20 to 30 minutes of it was spent watching this thing just rip to the upside. And I did have some tops in there. I had a bear call spread, and I had a broke wing butterfly, and then I had a butterfly spread. So I needed price to stay less than 5,700. I'm sorry, 5570, my bad. 5570. 5570 is where I needed price to stay below. And the settlement yesterday was 5569.07. So, and it also broke above that. Like it was up to like 75 or 76, which the difference between me making about $250 yesterday compared to risking about $2,000 is it's right there in that final like 3 minutes of trading. So I was fortunate it came out on the right side of the trade, but it was an interesting 20, 30 minutes to watch, just because I was like, you've got to be kidding me. I was actually like in real time pretty pissed watching this, and I was completely helpless. Like I saw, my butterfly spread. I'm sitting here in this profit trap in the final few minutes, and I couldn't do anything with it. There was no way I could close it out, and it just had to settle in, and it settled like right at the end of this. But I ended up getting about $1 profit trap on top of the 75 cents that I pulled in for the credit. And my my bear call spreads were safe by 93 cents. I had 2 of those. So anyway, crazy stuff. And then today we're just kind of melting up higher. This is the gap that I see that we possibly close. Close this gap around 5670. Look at the daily chart. Go back to your 200-day moving average. We're right on it right now. So I wouldn't get overly excited about how much higher this market can go. We're at the 200. We have a gap level today. Tomorrow's non-farm payroll. Does this start a gap fill? Maybe. Right? Does it run up a little bit higher on positive non-farm? Maybe. But I would be really, really shocked to see this market come back too much further than maybe this support area, this previous March pullback area, this measured move from a low to high, higher low to higher high. So I'm just, like I said, I'm cautious in here. So I think if you have some really good profit, probably a good spot to be moving stop losses and taking it, protecting it. Just saying. Coca-Cola dropping hard, people fleeing safety stocks, perhaps. Why? I mean, you're fleeing safety stocks because you think it's going to be risk on. Let's check, shall we? So Coca-Cola had earnings, beat on top and bottom. It is dropping. I still have covered calls. I've rolled. I'm playing defense there. MO's another one. MO, covered calls. Pfizer performing a little bit better this week. Pfizer's off the lows by about 15%. I have hopefully some big plans on Pfizer out to summer of 2026. I'd love to see Pfizer in the high 20s or low 30s. Other defensive plays, I would even say Walmart could be defensive. Walmart has earnings middle of May. I mean, if we get to all-time highs, great. Otherwise, as a retailer, I know that Walmart and Target and some big like retail companies met with the White House and just try to say, look, man, we're going to have empty shelves in a recession by summer if this doesn't get fixed. So I think that's why the narrative has changed so much. I don't know what's going on as far as real negotiations. Okay, I'm not privy to that, but I still think at the end of the day, this is just between U.S. and China. U.S. and China figure something out. Global economy benefits. U.S. and China drags their feet. Nobody says anything. U.S. says, oh, we're dealing with them. We're talking to them. We talk to them a lot. I think that's crap. I think that's BS. But the deadline is going to be July, and then every other country will see how that negotiation goes. But ultimately, this is a standoff between U.S. and China. Gold is down quite a bit today. Currency strength, Japanese yen got smashed last night. So from around 10 to 11 p.m. Eastern time, Japanese yen incredibly weak today. And that is why I said at those recent lows that it looks like a high reward to risk trade if you're buying the yen crosses, right? So buying Aussie yen, buying CAD yen. I mean, it's like you couldn't ask for a better setup here to tag the same August 5th low multiple times, get long at 101, 102, 102.50. You got several hundred pips of upside. That's good. That's all I was looking for. Okay, Swiss yen, I don't like that one since it's risk off, risk off. Euro yen probably back up into the cluster. Pound yen scalping maybe if you're taking some scalps. New Zealand yen, same thing as Aussie yen. You know, benefiting off these August 5th lows. Dollar yen probably driving traders crazy, but this is what I said. Watch the lows to buy dollar yen. It's as long as you're using like area 1, area 2, we're probably going to head back up into this 148, 149, 150 zone. Looks like it's doing that so far. Uh, 10%. I mean, I don't think it dropped that much, dude. I mean, from yesterday's close, it's down like $1. So I've got from the recent high, but a 4% move on Coca-Cola. And that goes back to the high in April 22nd. So I'm not sure what data you're looking at, but Pepsi maybe? I don't know. Pepsi's still down. Pepsi's dropped a lot. Pepsi's dropped, 8 or 9%. Coca-Cola, I just think is better position and it's cheaper. I like Coca-Cola better anyway. And this is, at the end of the day, this is a range trade. I mean, Coca-Cola has never been one that runs and impresses you with price action. So if we have highs and Coca-Cola comes back down into the midpoint or comes back down to support, I still think this is a, buy and hold. They also have water. Like Coca-Cola, I think Dasani's Coca-Cola. It's like, well, sometimes Coca-Cola around the world's cheaper than water. That's sad, but it's true. But they also do have water. So anyway, if we ever think about like, people are going to stop drinking soda, that's fine. They should be big companies like this should be making alternatives. Everyone knows Coke Zero, Coke, Diet Coke. It's terrible for you, but people still drink it. It's cheap. Anyway, to me, it's a stock. I've given up on the ESG tilted portfolio. I think that's greenwashing, as they say. So I'm just interested in taking trades to make money. All right, let's go currencies really quickly. I'll kind of go backwards. Usually I end with currencies. I'm still looking for dips and pullbacks in Aussie CAD, meaning this low, this high, looking for a fib swing in here for a third wave move back up into some resistance levels. So I still like Aussie CAD long. Aussie Swiss long still holding. Aussie yen long, if you're buying out these August 5th lows, I know it was a little bit of a crash through them, and that's always tough. Like, this is why I trade small. I mean, this was a good spot to start the process. The bottom got caught and it is responding. But, taking this trade with a stop loss, you have no idea. It's like, I'll go a 1 ATR below the lows. It's like, it's not safe enough. It's like trade small and let the drawdown fluctuate. Sometimes I'll give myself 1, 2, 3% drawdown. If I'm trading small, it's like I give myself on average about 500 pips of breathing room for most of my trades in Forex. That's a big window. I mean, I'm like dead wrong if I'm seeing prices go 500 pips through my levels. And a lot of times if I'm trading major highs and lows, they tend to respond at those levels within that. Okay, Aussie New Zealand responding, Aussie dollar. We're getting a pullback here. As I suspected, I think the Aussie dollar pulls back. It may offer up another swing trade, an open space. It might also be just noise. I mean, who knows? Maybe the Aussie dollar is going to settle back in. I still like the lows at like 6,000, but I just don't think there's a clean trade on it right now outside of you bought the lows and protected profit in this chop at 64. CAD Swiss looking better. That's good. I'm long CAD Swiss. CAD Yen, probably one of my favorite trades the last couple of weeks looking at the yen crosses because it's been so cooperative at the August 5th bottom. Same bottom. Really nice spot to buy in around 102. No trade on Swiss Yen. Euro Aussie. If it gets a pullback, I'll still look at a swing trade. If it just continues to slide lower, 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 I'm not going to chase that thing and sell the lows. That's my least favorite thing to do in Forex is, buy highs and sell lows. So I'm not going to chase that. EuroCAD is looking a lot better. The structure's broken. Multiple opportunities to sell these highs. And I would say if you are short EuroCAD, looking to come back into this cluster around 5,400. If you get to 5,400, trailing stop loss will work. If it goes lower, excellent. Previous highs could be a good spot to protect profit. Just don't be greedy on that one. If you're entered in around like 57 or 56, I mean, a 200-300 pip move is pretty good moving stop losses. Euro Swiss looking a little bit better. This would be, I'm hoping that with these lows, we come back up to these highs. And if we do, great. If this is a swing area to get a third wave move, I'll still watch for a potential bottoming pattern. The trick is this isn't necessarily let's say like a crown pattern because there's still equal lows here, equal lows here. So if it's just a range, oops, wrong button. If it's just a range from lows to highs, I'd still like to see if we can get to this high. That'd be like target 1. And if we can break those highs, then I'd measure a target 2. But at the very least, like a 1, 2, 3, and I'd be getting out of this trade for as much profit as I can take. Euro pounds, robots is doing work there. It's starting to. It's basically you'll find an equilibrium after this ridiculous blowout move. Euro yen, I didn't like that one because we were off the lows. This would never position the same way. This got so strong because of the dollar weakening. This one did offer up a good trade, but it was timing wise, it was not the yen basket. This was the euro and the dollar. So there was your chance to get long euro dollar. It was way earlier than what we're seeing now with those recent yen lows. Euro New Zealand, same as euro Aussie. If we pull back and slide lower, that's a good swing trade. If we continue to go lower, 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 I'm not chasing it. I'll just stand aside. Euro dollar should be pulling back. Is anybody short euro dollar? So I said if you're shorting euro dollar, area 1, if it revisits the highs, area 2, I like shorting this, and it's pretty clean. A 23% pullback, a 30% pullback, 38% pullback, pockets back here, 50% pullback. Yeah, it's a good looking trade. Do I want to be crazy aggressive on it? No, but I'd say like a 30 to 38% pullback is still going to offer up maybe 200 to 300 pips. I do like that trade. Pound Aussie. Maybe something like this. High, low, some indecision, and then maybe it breaks later. Alan, what do you got there? Short European or euro dollar. Nice pullback, 112. Yeah, there you go. Yeah, I like short. I'm trying to take it down into probably the 111.50 zone, 110.50 zone. That'd be like pretty conservative, but I think those levels get hit. If we go 50%, you're talking 108.70, 108.80. So I'd just round that to 109 and say if we get to like 110.50 or 109, that's a pretty good spot to be trapping profits pretty tight, moving stop losses. Pound Aussie, pound CAD, turning a little bit. Pound Swiss, still looking good to the upside. I still think this runs up into 112.40 or 113.70. If you like pound Swiss, I do. So, in here for area 1, if it pulls back into the bottoms again, area 2, but just wouldn't be surprised if this thing just recovers, find a pocket, find some profit. Pound yen, if you're scalping, this one also didn't come back down to the August lows. So never really offered up a great trade. It's just been chopped through this high to low. That's why I said it's not been my favorite trade, but I know a lot of traders like to scalp pound yen because it is volatile. Pound New Zealand, I don't think this is the pullback. I think we have a low to high, higher low to higher high. That would be a better pullback to look for a short if that's offered up. Swing trade, there's your risk. There's your reward type trade down to the 200 moving average. Pound dollar should be pulling back. I thought euro dollar was a cleaner trade, although it is sitting here on pound dollar back up at same resistance levels. If you're shorting this, okay, so small trade and then reserve a second trade at the top and see if this settles back into, this area, anything. Maybe it's just a big range. Does this come all the way back down to these lows? I don't think so. But even if it settles into the middle of that, there's still a lot of area to be kind of short near the highs and see if this cooperates. New Zealand CAD, getting the pullback that I want, I'll be looking for a kind of a 50618 swing and see if this will have another symmetry play to the upside. 3 to 5 waves. New Zealand Swiss looking a bit better. Still waiting to kind of identify my bottoming pattern. It may not be anything more than this. This might just be like slowly working its way higher, getting back to equal highs. Then we get a pullback. Then we get a 3-wave move. That is enough. You know, that's enough. That's plenty of profit. Plenty of profit if we get another swing higher. I mean, heck, if we go all the way up to this high again, I mean, I'm going to see probably another 200 to 300 pips of profit on my core position. So that's enough to say I could probably take some profit and then just reestablish new positions. So I'll keep watching that. New Zealand yen. If you had the courage to buy this thing with Aussie yen off the August 5th bottom, you know, it's rewarding you now. New Zealand dollar. Pullback was expected. You're getting it. You know, the best trade on New Zealand dollar was if you bought low, cleared these highs, trailed your stop losses. That was a great trade. On the pullback, I don't know. I mean, pullback if we go low to high, pullback here towards maybe a 50618 786 zone, something along this line. If we have open space trading, I mean, if the dollar gets weaker again for another wave, we could still get into like 63, 6400. But I be careful on the dollar. Like the dollar stuff, there's like big themes. There's broken correlations. Gold is dropping today. Dollar is up. You know, dollar CAD, still don't love it. Dollar Swiss looking better. I'm trying to get dollar Swiss back into like 87, 8750 to 8800. Dollar yen, you know, actually offered up a pretty good entry if you were long. So equal lows in here, equal lows in here. It wasn't an easy way to call the bottom, but it did not do too much damage below this low or this low. And now it's up, you know, 300 pips off the bottoms. So it's got a good little run. Pulling back into this like cluster, possibly getting back to like the 148, 149 handle. That's not a bad spot to be taking some profit. Okay, that has covered all the currency pairs. Let's go dollar index, gold, silver. I did get a trade yesterday on CL that I'll talk through. So let's go dollar index. Dollar index is responding. So if you're following this on a smaller time frame, like a 4-hour, okay, I said the 4-hour chart could be pulling back towards the 200 moving average. It's right there. So is it a little, you know, swing? Sure, maybe. Would I call the top of that? I mean, see if it behaves. If it breaks down, stop loss above, perhaps it revisits the lows again. But if it goes here to here to here to here, wait for this trend line. You've got dollar longs in this area, and then wait for confirmation to realign, sell above, and then revisit the lows and see if it trends lower. If the dollar is going to continue to weaken, there should be a good clean trade on it. There's lots of resistance back here between this like 102, you know, 102 to 103 zone. Lots of resistance. That's if we were to stay pretty persistent, you know, on a retracement. That 102 to 103 handle on the DXY, I mean, that makes a lot of sense to roll over. But until then, the dollar could see some relief. Okay, so that's dollar index. Oil, nice little bounce off the lows. CL showing some profit. I did take a trade on CL it was basically a pending order that I put in my pulver alerts. They got filled. Here's the trade. So I bought a 57 put, sold a 56.50 put. That's a little profit trap. And then I sold a 56 by 55 bull put spread. Right now, that trade, this is a 1111. Right now, the trade it's about break even. You know, this is out to June. Basically, if we hold the lows, I'll make $150 on the trade. There is a potential profit trap that pays me $500 if we're going to be sitting near the lows. The best trade is I just want to take it for $150 and have it be an income trade. So that was the fill from yesterday. Would I consider shorting oil? No, I'm not going to short oil. I'm going to take a stab at it to the upside. I'm going to see if this level will respond. Usually oil tends to be seasonal. So in the summertime, oil prices are elevated a little bit. There's more demand for it. You know, I know that there's been talks of Saudi Arabia boosting production, but we also know that based on the demand, I mean, you can't really drive prices too much lower than like $55. Anything lower than that, you start to see countries that can't produce oil at a profitable level. Margins get really thin, and nobody's having fun making oil, making no money. So I think at the very least, it's could. I mean, hopefully this holds, but a range trade that comes back up into maybe low 60s. I think once we broke this floor, like I mean that's a key level that was broken for multiple months. And if we come back up into the 60s again, like that should be enough for me to take profit on my 111 trade. And that's it. Like I don't need to do anything special. I just have to find risk. But I'm not going to short oil. If I was going to short oil, I better see a rejection here. I'd have to short this thing at like 64, 65 and look for a rejection. Otherwise, not going to short it. Natural gas. I'm going to see if UNG can get back above the 200-day moving average. Let me set a chart alarm here around 18. I'll go 1880. Back above 200-day. Okay, see if we're back above the 200 moving average. Gold is finally dropping. So high, low, lower high, still kind of working through. I think we at least hit a symmetry mark around 31.38. If we go a little bit lower, if this is a kind of a head and shoulders type measurement, then maybe down to like 30.28. So I'll just round this. I'll say 31.40 to around 30.30. We'll just say if it overshoots that round number at 3,000, to me, those are good spots to start to reposition and buy some more gold. I do like more gold. But I have been patiently waiting for this to pull back. I think also some of the safe haven flows we've seen in gold have been given back a little bit because we are seeing a nice little rip in the markets. I mean, we've got the German markets responding, almost back to the spot where we broke down during Liberation Day. The U.S. markets have responded nicely off the April 7 lows. So I think gold is just getting a little bit of a pullback, but I'm sure there's plenty of central banks that are still willing to buy gold. Obviously, if they get a discount on gold, they're going to be happy too. So this high, I mean, gold's down about 7%, 7 and change, 7.8% off the recent highs. I'm looking for corrections on gold, potentially about a 21% correction. I might be crazy to think that, but technically that's where I want to buy it. I mean, if I get like a 10% correction, cool, I'll start trading it. If I get a 20% correction, heck yeah, I'll start trading it. But I'm not. I mean, if we go to all-time highs again, so be it. But area 1 and 2, I mean, that works for me. Make sense? Okay. So I hope gold continues to decline a little bit. All I'm going to do is waiting for opportunities to find some support, start positioning on GLD again, start positioning on gold futures. Pretty simple. If it doesn't, and all of a sudden it's like, yeah, that's it. High, low, lower, high, lower, low. And that's it. Well, I guess I'll still benefit from that. And I just won't get the entries that I want. But meanwhile, I still have silver. Silver, I just want to see if it breaks this 34.88 alarm. This would be kind of a nice resistance zone to break out of. We could have a longer range. Could this come back down to here? Yeah, it could. A lot of things could happen in silver. But if we hit this low, I'm probably going to buy some more, or at least add some more exposure to it. I think that's a good income trade. If it breaks this resistance, that to me is where silver really gets exciting. Above 35 is where silver gets really exciting. Bitcoin off to some fresh highs, 96.5 and change. I'm not going to adjust the fib just in case this drifts a little bit higher. I think this was a relatively good swing here off these lows. Again, I would be a little skeptical if Bitcoin comes all the way up to all-time highs without having really any pullback. Don't be shocked if we do hit resistance and we come back down into either this halfway point or possibly down to range lows again. So 1 and 2. Right? If Bitcoin goes up, that's fine. It's fine. I don't mind it at all. But are we breaking, if we get to 108, 109, are we actually breaking to go higher? I mean, I'll give it a chance. If it's more accumulation, we got to be ready for this. There's a swing. Is it going to be accumulation before we go higher? Or is it going to be, there's your swing, there's your pullback, and then here we go making highs again? I don't know. But either way, I still like a kind of pro Bitcoin bullish stance. Mostly exposed through IBIT and having my Coinbase exposure, Ledger. I've got some cold storage wallets, but it's kind of nice to have it securitized and actually be able to trade it for clients now. But anyway, we're doing well. I had a bull put spread 52 by 51, got some income trades, sold a bunch of puts. So, I mean, that's income wise. And then I also have a bunch of shares. And so far, I think I'm up a decent amount. IBIT is up around $43,700. Yay. Let's get more. MicroStrategy up to 396, making some fresh highs. I will continue to run with this one. My bull call spread on MicroStrategy. So I'm up about $7,500. I have some shares. I'm still looking to get those shares called away. June is my collar trade expiration. My bull call spreads are each up around $270. Max profit on those around $1,100. If I start to see this trading for, let's say, $600, $700 profit, I'm going to take a winner there. I'm trying to get. I mean, this potentially can pay, I think, like 300%, 400%. So if I get 150 to 200%, I think I'm going to be okay taking profit. So we'll see what happens. MicroStrategy has earnings today after market, along with Apple and Amazon. So Apple trading at $212.93, Amazon trading at $189. Still some room for those to still recover. Okay, still recover. I do wonder what job numbers look like tomorrow with non-farm in the morning. That could be, a bit of a, I don't know, maybe a slap in the face of this hot market right now. But that's the soft data becoming, the hard data. Like right now, companies are laying off workers. Companies are scrambling to figure out how they can operate through this trade war and hopefully come out profitable. I know that the U.S. is trying to pass a tax cut right now and try to incentivize that, trying to somehow use tariffs as a way to cover a tax cut. I mean, Doge was claiming they're gonna cut $2 trillion, and they're maybe gonna cut 250 billion. I think Musk is now out of Doge. I think that whole thing that ship has sailed. So I just think the narrative has changed. They started off as like chainsaw, little government, cut spending, get rid of the fluff, drain the swamp, and look at what happened. We break the bond market and we pivot hard, and now everything's positive. It's like the narrative and the commentary is so important to see like how sensitive this market is. But non-farm, the numbers tomorrow are, I think it's adequate. I mean, I think we're looking at like 100,000 jobs. Yeah, forecast for 133, previous 228. I would say the market might be a little more sensitive. If we have a miss, ADP numbers this week were pretty bad. Negative GDP, that was pretty bad. If we have like a less than 100K job print and we have a 4.3, that might start to raise some heads. I mean, it really will, because it's showing like, well, this is the trend. We went from a 4.1, 4.2, 4.3. Like it doesn't take much for 4.3 to become 4.4, become 4.5. And that is where the Fed talked about the end of the year employment being like 4.5 was supposed to be the end of the year. So I do see that as a potential issue. So that could also mean that, Wall Street, as this recovered from April 7th, Wall Street's now like taking a bit of a victory lap. Wall Street's, back up and kind of fighting the good fight. Main Street, on the other hand, could be witnessing, more job losses, softer labor market, and this becomes even more accelerated from September onward. Okay, we'll see what happens. Chart alarm NQ hit 2056. Okay, fine. The futures, Broadcom up above the highs. They don't have earnings, but it's just kind of getting a run from Mag 7. Nvidia up to 113. I did another collar trade on Nvidia yesterday. I think on Tesla, since it has slowed down a little bit, I was interested in selling another call on Tesla. But if I get it called away this week, I'm going to make $6,500 on Tesla at the 257.50. Let me see what that's going to look like. If I go out on Tesla, let me go here. So Tesla, well, that quickly turned. Tesla was one of my crappiest positions. Now it's up 13 grand. Go figure. These are looking a lot better. 245 out to May. I'm gonna sit on this one for the weekend Let me see what the 245 is for May 16th based on the option chain. 245 right now is it's a 12 delta. So we'd have to have like a nasty spill to the downside based on current option prices. We've already had earnings. Plus or minus out to May 16th right now based on current option environment and volatility is that we'd have about a $30 move from current prices. So that puts me down to about 259. Well, 245 is my line in the sand here. I don't think I'd take another chunk of assignment. Even the strike for next week, if it went out to the 9th, if I rolled my 257, I mean, again, I could roll this and still have it not be tested, still get it called away. I'm just not trying to be super greedy. I'm just not, just in case this market is going to, if this turns, if Tesla, I mean, there's two ways this plays out, right? Tesla either breaks and goes higher, and I'm missing out on some of that breakout, or Tesla uses this resistance and falls. Well, if it falls, it's probably going to be as quickly as it did here, I mean, we know how volatile the stock can be. So what I'm trying not to do is end up taking on another batch of shares while I'm still holding this one and repairing it with a covered call. So if I were to roll this call out again and try to go to the 5/9 expiration, I still get it called away at 257.50 most likely. I could go lower and lower my cost basis even more and just sit on it. But net, I mean, I'm actually curious what a roll would look like right now. So if I put on a roll, let me see what this will trade for. So if I do, these are all looking better for profit. So these May 16th expirations, like this one's looking really good for profit. It's up around 78%. I'll probably sit on this one over the weekend. I mean, I don't think Friday just by itself is going to be a crazy dump day, but if it is, I mean, maybe it's wise to take profit on this just to not worry about it. For me, the extra like $60 is not worth the potential risk. So taking profit there, that would be, 220, 220, 220, another 220. This one's up about $135. I'd like to get a bit more profit out of these if I can. This one it's the same expiration, just a different strike price. So, I mean, the risk off side of my brain wants to just take all the profit. And I think I'd be okay if I did that. So let me kick that around. I'm still taking on some heat with these wide bull put spreads. Now I got a naked put that is somehow still not in profit. I don't understand. I mean, it's elite, but my God, it's like I can't get any profit when Tesla's up like 20, 30% off the lows. Tesla's up 35% off the lows. I put that in near the high of volatility, and somehow it's like, it's still a negative naked put, which I found that surprising. Anywho, the good thing is there's profit to play with. Let me see what a covered call would look like if I rolled this out to next week. So if I take the covered call here and roll it out to next week, same strike price, I get $2.40. That'd be another $1,000 to the bottom line. So 240. So I get another $1,200 that helped me grab like $7,700 on Tesla. I do like it. It would be about a 13 to 14% chance of the price falling back to next week. I could also go deeper. I could just lower this and say, okay, well, I'll take less profit. I get $4.50, but I'm losing, $2.50. So, I mean, the net is I lower my strike by $2. I get $2.40. Like, that's not awful. I kind of get the full fill. I'm probably losing about 25 cents on that trade if I lower it down. So I get more income, but because I'm lowering my strike price, it's going to be like a net result of about 225 instead of 250. So it's close. So anyway, I'll kick that around. It might be worth rolling. It might just be worth taking all the profit, not worried about the risk. But I also don't mind having some. I don't know, man. I mean, overall, Tesla, it's like I don't mind these stocks that I just dollar cost average in, but I don't know if I want to have like tons and tons of exposure on Tesla. So it's been a good income trade for me. I flipped it once. So this is going to be a second time. I don't want to have like 100 shares and then have to flip it with another chunk. So I'm trying to avoid having multiple assignments come together. That's been the story. TLT, Let me take a look here. 88.59. So my TLT position is back in profit, which I'm happy with. And let's see. So TLT, it's a diagonal spread. Currently about $1,000. Covered call. It's not a covered call. It's a sell call at 96. We're trading at 89. These are out to July. This is a 2-year. I basically did a 2-year treasury play. So I'm out to January 2027. I'm not trying to hold this to January 2027. What I'm trying to do is see if TLT will, in fact, make its way back up to the recent highs here. So, I mean, I guess we got a little high. This is when the bond market broke. I think at best we're maybe going to see this low holding and maybe a range trade on TLT. So, like I said, not trying to be too greedy on this overall position. But because I've got a couple years on it, I'd like to think that, rates come down, yields come down. Even if it's in the next 12 months, I still have plenty of time to see this thing get back into like let's say the high 90s or early hundreds. I takes a profit. But I honestly, I don't love to, I'd rather have gold. So if and when I decide to take profit on TLT, I'm probably going to do more of a split between gold and silver again and add more exposure there. Okay. Anything else for the day? Let's talk. So if bonds are down today, 88.61, bonds are down about 1%. That means that yields have probably gone up. So US 10-year is up slightly. So we're off the lows around 4.12 up to 4.20. I know I just did a lock within 30 days around 6.6 right now for the house that I'm closing on end of May. That might be as good as it gets right now, unless we get a surprise move, which I don't think is happening. We do have the Fed coming out May 7th. They're not going to cut rates. That's still kind of baked in like 93, almost 94%. So the watch tool here. Okay. So make sure I'm good on my calendar today. So I'm going to go for like another 7 minutes or so. So 95 point, yeah, there's almost a 96% chance they're not doing anything in May. Let me check Trueflation for a second. What's our inflation picture look like? I mean, it's down. I mean, the market's dropping 20% is deflationary because it forces everyone to cut back. I don't think that the labor market is really reflecting. So initial jobless claims. This is what I've been watching here for the last couple of months. I mean, if we start to see this spiking higher, then that's not a good sign. If we start to see initial jobless claims and continuing jobless claims trending higher, that's not a good sign. But so far, I mean, this might be a little alarming, maybe a little bit. This is continuing jobless claims, but this is like one data point, doesn't make a trend, right? So are we going to see this continue to go higher? If this goes higher, then we should start paying attention to this labor market. But if this continues to go, well, it's up this time and then it's down, then it's up and then it's down. I mean, that's a pretty big swing. But if it levels off, then we're still in that kind of no recession scenario where if there's no real labor struggle, then it's probably not going to be a recession. But this does look like if it keeps climbing, like it's going to be something we should pay attention to. So don't ignore initial jobless claims, continuing jobless claims, because that is going to be a theme for this year. This whole idea of the market going all the way back to the top again, if it happens to me, it's a bubble. I mean, I think if this market gets all the way back to the highs, this is a freaking bubble that is on the brink of broadening pattern. And when we come back down, we're coming all the way back down those lows again. The nice thing is if that happens, you can make a lot of money on the way up still by just a melt up. But if you can, time this over a 1 or 2 year window, there's a fortune to be made in that. And it also could be done with a very small risk. I mean, I could probably risk $1,000 to stand to make maybe 30 to 40 grand. There are ways to position for that, like massive reward to risk. And that would be great, because up here, it's like, I'm very cautious of how high this market goes. And it just is the same story. It's like cautiously bullish, climb the wall of worry. Am I just stupid for fighting this market? I don't think I am, especially if, real data becomes earnings compression, labor market slowdown. I don't know, all the stuff. So as I've said this whole week, I am cautious right now. We are back to the 200-day moving average. We still have a majority of the S&P 500 below the 200-day moving average, which means that the broader market's still in a bit of a bear market until everything is back above the 200. So if we have, 50+% of S&P stocks greater than the 200 moving average, then I could say, okay, maybe this is going to be a full-on recovery. That's the slow lagging timing, but maybe we're there and we're going to see some market breadth. But if this turns hard, then we never get the market breadth above the 200. And this is just a matter of, this was a nice recovery, but here we are right back in the middle. It's not at highs, it's not at lows, and this is no man's land. That was literally the title of my session yesterday. No man's land. It's like, what do we do? We're not bullish. We're not crazy bearish. We're just in the middle. And maybe that's where the market's going to be stable for a little bit, but it's not really going to give any sense of direction. So just saying, it could be a little more difficult. Okay. All right. Any other charts? We did dollar, oil, gold, silver, all currencies. We did the indexes. I didn't do the Qs real quick, but Qs are up as well, just above the 200-day moving average. I measured this one out at NDX, I think. Yep. So symmetry plays. So low to high, higher low to higher high. We're getting right there towards that March high. So that would be some resistance on the NDX. QQQ, same thing. We have some gaps to fill. I mean, now that this gap is available, this gap is available. Does it run into some resistance here? Do we pull back into those levels first? Right? It doesn't have to be like a full-on bear move, but I do suspect that we would have some type of retracement. What's going to be the call? I have no idea. Just maybe profit taking. Maybe some bad news pops up. I have no idea. If the market keeps going higher, it does make me even angrier that this is what happened. Like, this didn't need to happen. If the market's going to all-time highs, this didn't need to happen. All it did was scare the crap out of everybody, blow up some accounts. It blew up like everyone that's leveraged. If you're leveraged, a lot of accounts are blown up there. The basis trade, it's one of the biggest providers of liquidity in the bond market. It blew up, and somehow it's like, yeah, we're back to all-time highs. Like, I'm a bit of a realist here. It's like, I know how disruptive these silly events are. And how do we fix it? Well, the narrative changes and there's more fiscal policy. Like, that's it. There's no monetary policy coming in right now, but the global liquidity is increasing. Fiscal policy is increasing. And it's, we're being told that we just drained the swamp, which we didn't. Like, we pivoted so hard on that April 7th, April 8th, April 9th window that I don't know if the market goes back up, right? Market goes back up. It's just very disruptive. It conditions traders yet again to buy the dip. And I'm just telling you, be prepared for that next correction to be a legitimate bear market, that you don't buy the dip, right? That's the one that comes in and lower highs and lower lows and lower highs and lower lows. And that's the pain trade. Could be, a nasty bear market with a reality check. But I'm not going to call that right now. I'd feel much better calling a bear market when we're sitting here at crazy all-time highs and a price to earnings at 25, 26, 27 PE. Then sure, I'll be a little bit more toppy in the markets. But until then, it's like, well, enjoy the ride. Okay. All right. I don't know what's going on in the chat here. I just see a lot of crazy comments. So I think I'll wrap it up there. We did all currencies: gold, silver, Bitcoin, indexes, stocks. We got earnings today on Apple and Amazon, so keep an eye on that. Non-farm payroll tomorrow morning, forecasted for 133, and average hourly earnings at 0.3, unemployment rate 4.2. Like I said, I'm going to be watching initial jobless claims, continued jobless claims. Let's see what the numbers give us tomorrow. Is this going to make the market flinch like GDP did this week? The market clearly flinched, but it wasn't enough. I mean, we still had Mag 7, which is stronger. Wall Street's still up. And, the core PC coming down was seen as a good thing, I suppose. Also, Trump tweeted something yesterday, or I don't know what the hell he said yesterday. I don't know. It's every stinking day. So, but negative GDP is a flinch. So is non-farm a flinch? Maybe. We'll find out. Okay. Sounds good. Have a good day. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.